Is going to be more in line with a Fed cutting mode in terms of the inflation data than Q1, then maybe you still think that, and maybe that didn't tell you anything new. But the market certainly took a wobble.
Yeah, I mean, the theme seems to just be that net-net, you get all this volatility intraday, but it all comes kind of right back in the next 5 days. At least with the bond market story, the equity market story, opening in just a few seconds. We're going to see what that read-through does actually look like, and that marks that the FTSE 100 is officially open as we wait for some of those other exchanges. Marginally in positive territory, though, even the futures weren't doing it, and they're starting to see a slight jump when you're talking about the initial move on the macro space.
Yeah, indeed. Just looking at where we are on these markets then, some slight positivity, up by 0.2% on the FTSE 100. In terms of market reaction to the election story, it was much talked about in markets yesterday that perhaps this was going to come, and of course we saw it after hours, the announcement of the snap election. But other markets that were still trading, of course the pound seemed to take things in their stride. We'll see if we get any thinking in the bond market about this, or maybe that just develops through the course of the campaign over the next 6 weeks, or maybe not. Maybe it's not really a market story.
Yep. We will try and find one. If there is one there,
we'll find it.
We will find it. I absolutely. But it's interesting that we were talking to Ipsos Mori earlier, saying how important the economy was going to be. Single stocks, you've got the chip sector higher. Certainly no surprise there. ASML is high. You've got Infineon tracking higher as well. So it does seem as if technology is one of the gainers that we are seeing in terms of the sector story. It's interesting that St James's Place is up this morning. We look at the story that Joe brought us earlier on Hargreaves Lansdown and the potential offer from private equity for that business. So James's Place maybe getting a little halo effect off that this morning as well.
Yeah, Hargreaves Lansdown not open yet, I think. And I actually saw some quite varied calls around where it might trade. Some suggesting, M&A activity, typically it trades higher, but others suggesting that there wasn't much upside. So we'll see where that one comes through. In terms of some of the other stocks that we've been focusing on this morning, Wizz Air having a fairly good morning, up by just over 5%. We spoke to the CEO of Wizz Air, Joseph Ferrazzi. It's very much about the supply chain, isn't it? About the engines and whether they can keep their planes flying with all the Pratt & Whitney issues.
It is, and that's where the problem lies at the moment for the entire sector. It's not just Pratt & Whitney with the Airbus aircraft, it's also the Boeing issues as well, and Ryanair has been hit there. But it's interesting that the picture on fares is actually as muted as it is. Now, it was interesting talking to Joseph. His view kind of was that maybe Ryanair got ahead of its skis and had to sort of wind itself back in a little bit. EasyJet's not painting a particularly kind of clear picture. He's sounding a little bit more optimistic, but he's planning for next year. He just wants his aeroplanes back. He just wants to be able to put aircraft in the air. He says the demand is there. The consumer, he said, which I thought was really interesting, is in great shape still.
We got to mention another one as well. We got news that the UK CMA is actually going to be probing their veterinary sector. They've been talking about this for a little while now, really telegraphing this well. Was having a market read-through this morning. Pets at home falling about 1.1%. CVS down about 2.5%.
I feel like this is a part of the consumer landscape in the UK that you might be familiar with.
I'm very sensitive to this. Harvey, my dog, lives very exposed. Harvey lives a very luxurious life. This matters a lot. I actually spend more on his insurance and needs than I do on my own.
Amazing.
Which I think speaks to the UK lifestyle and owning a pet in the UK. Something I'm sure, I think, Guy, you have a dog.
I got a dog.
True.
I got a dog. I got children. I got all kinds of things. They all seem to require a great deal of financing.
Yeah. All right. Well, that is your micro story. There's plenty of the macro as well, though, and we keep kind of coming back to this theme of what actually is moving markets. What should we be sensitive to? The equity story, the bond market story, the FOMC minutes that nobody really saw coming. Well, it all kind of connects together. And the perfect person, I should say, to talk to us about it joins us on set this morning. Kent Kinsell, lovely to see you in London, by the way. Welcome. President and CEO of Churchill Asset Management. look, we're obsessed in terms of trying to find a narrative here, and there's a million things going on. So I'm going to go big picture with you first. When we're talking about the volatility in this market and this consumer resilience that just doesn't quit coming out of the States, is the NVIDIA story, is the Fed story ultimately at its core just a question of liquidity, and when does that snap?
Well, look, I think, as we look at the markets, we're seeing a long-term trend of rates ultimately normalizing. It's taking longer, right? So we're definitely in a higher for longer environment. But as rates normalize, the opportunity for companies to go to the capital markets and raise financing is opening up. I mean, we had the broadly syndicated loan market, the liquid loan markets essentially closed for the last 18 to 24 months. So, they've opened up. The empire strikes back. We're seeing the large liquid markets open for companies. So I think that all bodes well for liquidity, the ability of companies to raise capital, the ability to start investing in businesses, and frankly, the return of M&A activity.
Is that just a function, though, of money sitting on the sidelines that has been for years now, kind of dipping their toe back in the water, getting a little bit more comfortable here to actively participate in this market as opposed to sitting, say, on front-end yields or in private equity? And we'll circle back to the alternative story in a moment. But is that what this story is, as opposed to real confidence in the fundamentals?
Well, I think you are seeing some confidence return. We had a reasonably long period there of price discovery in the M&A markets. Gee, our company's really worth 18, 20 times cash flow. Are we overpaying for businesses? And was the financing markets, were they an aberration in terms of funding deals that were maybe over-levered or undercapitalized? I think that things are moving in the right direction. We saw a significant return to normalcy in the financing markets in the world that we live in, which is private credit and private equity. Deal activity was actually quite good in the core middle market, which is the third largest global economy. If you kind of look at the overall U.S. market, we saw a significant resurgence in M&A activity, deal activity, private equity coming off the sidelines. So, for example, our M&A activity, our deal investing activity was up 80% quarter over quarter from 23 to 24, and was up 60% in the fourth quarter. So we're seeing a gradual return to normalcy against a backdrop, obviously, of political uncertainty, both here and in the U.S.
Yes, I want to come to that in just a moment. But you were just talking there about the role of private equity, and I wonder what the mood's like in that sector, because if you can't exit, you can't buy, it seems. And we were there for quite a while, weren't we? And now things are changing. I mean, is it just in time for the private equity space? What's the mood there?
Well, look, I think you've had private equity firms unable to deliver distributions for, a reasonable time here. Distributions on our private equity fund commitments and our co-investments, were down significantly last year. So I think private equity is beginning to come off the sidelines. I think we're coming through a period of price discovery, and I think we're starting to see buyers and sellers match up in a better way. So I'm pretty optimistic about the economic environment, deal environment, and M&A activity. And as we move through the course of 24, I think rates, will come down. Obviously, slower, higher for longer. They will come down slowly, and I think that'll drive better investment activity.
You mentioned the link with politics and political uncertainty. So I don't need you to comment specifically on National Grid and its plans, but we've got this big UK business with a big issue today, issuing shares to invest in the National Grid, all about the electrification story here in the UK. And this comes just a day after we had an election called.
Yeah.
Does politics not get in the way of some of this capital markets activity? Is it much more about the rate story now?
I think it's more about the rate story, although the backdrop of the political dynamics will increasingly come to bear. I think you'll see the Fed back away a bit from interjecting themselves into the election. So at some point in July or August, you'll see the Fed, try to stay out of it and allow hopefully the people to make that decision. But I do think the underlying backdrop is a move toward normalcy in rates. I think the new normal will be higher than where it's been historically, but I think businesses and companies are getting used to that, and hopefully post-election we'll start to see some certainty around business conditions and continued improvement of activity.
Morning, Ken. You talk about the fact that companies are getting used to the higher for longer environment. What's happening inside portfolio companies right now? Are they really getting used to higher for longer? private equity is very good at financial engineering and is figuring out various ways to make the debt loads that some of the companies it has within its portfolio can be managed, and the duration effectively being pushed out to allow these companies to continue to operate. If rates stay higher for much longer, are we at some point going to see the end of the road in the ability of private equity to kind of push that process forward?
So there's good and bad there. So I would say from a portfolio perspective, there are companies that were aggressively financed over the last several years that are going to continue to have issues. And you are starting to see cracks in portfolios of certain lenders and certain managers. I would say from our perspective, we have a portfolio of 450 U.S. mid-sized companies that we are watching very carefully. We're not seeing it, but I can tell you that other lenders that may have been a bit more aggressive than us are starting to see it. So I think the longer the higher rate environment goes, the more you're going to see companies that simply can't sustain themselves at the higher leverage and at the higher price of financing. If your interest coverage ratios are less than 1, you have an issue. So in that sense, I think you're starting to see it. On the other hand, I would say the opening of the large liquid loan markets has given them a bit of a reprieve in the sense that companies that couldn't finance themselves, didn't have an alternative in the liquid markets, are now coming to market, frankly, at record numbers in the first quarter. So what you're seeing is refinancing activity, deals being done to kind of deal with maturity walls in companies that have to refinance or otherwise have issues. So I think it's a mixed bag. But overall, the opening of the larger markets, has been a positive for availability of financing and companies' ability to kind of redo their balance sheet or redo their capital structure.
How much of a difference, therefore, is there between the United States and what's happening in Europe? We're still arguing about a capital markets union here in Europe. We still don't have the capacity to finance in the same way. We still don't have the number of options that US companies have in terms of their ability to seek financing. And I'm wondering, therefore, when you being here in London, how you see the different story in Europe versus the United States, and how companies are therefore going to navigate, how portfolio companies are going to navigate this process, given that difference in the financing options that they have.
Sure. Well, I think as a direct lender, as a private credit investor, I would say both markets are actually quite appealing, but for different reasons, right?
Okay.
So if you're a direct lender in Europe, for example, you have less large-scale competitors, and you've got significant barriers to entry given all the local currencies and local laws, right? So you've got different bankruptcy laws, you've got different dynamics. You really need to be local in Europe, and that really creates barriers to entry. And so there are a limited number of larger players in the market. So as a lender, that's a good thing. I'd say as a borrower, it tends to raise costs. So you're generally paying more. The capital markets are less efficient. There's more, the liquid markets are smaller overall. In the U.S. market, larger, more competition, capital markets more efficient. And so I would say from an investment perspective, different dynamics. But overall, the U.S., I would say, is running ahead of Europe in terms of the economy and overall, economic dynamics. I would say if you look at the various industries, software, technology in the U.S. doing extremely well. Pockets of challenges in healthcare, particularly dealing with reimbursement pressures. Certain healthcare businesses are having a difficult time. But overall, business services, faring quite well through this.
Ken, I'm going to put you on the spot here. 20, 30 seconds, if you can.
Sure.
Are the public market and the private market, are the valuations you're seeing in both justified?
I think that, we deal mostly in the private markets, right? Although, obviously, there's a knock-on effect, in terms of public valuations. I would say that they are increasingly finding their level. They're down roughly 3 to 4 turns from where they were 18 to 24 months ago. So a very, very high-quality company, mid-market, private markets company, could easily trade for 15, 16, 17 times cash flow. In today's environment, that same company is probably trading at 11 to 12 times cash flow. So still good by historical standards, but the edge has been taken off a bit. So I think they are justified today. I think they've found their level. Obviously, the financing markets have come in dramatically. Just with the cost of leverage, you simply can't put 6 or 7 times leverage on a business today. So as a result of that, leverage and pricing have come in. but I would say they are finding their levels. And as they find their levels, deal activity has picked up a fair amount.
Ken, great to see you. It's interesting that the Fed noted yesterday in the minutes, several members commented on the rapid growth of private credit markets. So the Fed's certainly sitting up and paying attention to what you guys are up to. Ken Kinsella, nice to see you in London.
Thanks
very much indeed for stopping by. President and CEO of Churchill Asset Management. Thank you very much. Let's take a look at where some of the biggest stocks here in Europe are moving this morning. We're watching carefully to see the NVIDIA effect. Francine is going to be talking to the CEO of Ferrari in the next hour, so pay attention to that conversation. But look, Schneider's up, ASML rising very nicely. The NVIDIA effect front and center in European markets this morning. What else are we watching? Let's find out. Joe Easton, over to you.
So we will continue with that look at the chip stocks. You mentioned ASML there, up around 2.5%. BE Semi also gaining. Aixtron, the semiconductor manufacturing companies, gaining the most following that blowout NVIDIA report. The revenue well above $25 billion per quarter for NVIDIA. It's hugely impressive. We're seeing it feed through into some of the chip makers as well, as ST Micro and Infineon, both of them gaining this morning. But we're also going to look at the UK with Hargreaves Lansdown, this surprise takeover offer that came out after the close of trading yesterday. That is a big mover, the biggest mover we've got on the stock 600 today. There it is, up 15%. That should be on track for a record gain. It was up the most in 4 years at the open of trading. This bid coming from CVC, also Abu Dhabi as well, surprising the market. And look at the peers as well, because we're seeing AJ Bell gaining 10%. They've got their own earnings out today, but this seems to be driving the move. Also seeing gains in Aberdeen, and as Guy mentioned earlier, St James's Place, seeing a read-through. Could this be the next UK sector that gets a string of takeover bids? We'll wait to see if this progresses with the Hargreaves deal. Then in terms of some of those other UK stocks, we mentioned the potential election impact on utilities, specifically water stocks, some concern around a potential halt to dividends while the election goes through, and potentially that big paper on the water sector about cleaning up the industry, and also the debt loads potentially being delayed. So we're seeing some drops in Severn Trent United Utilities as well. But we also had an eye-watering placement of shares coming from Nat Grid. They're doing a rights issue. It's £7 billion. We all did a double take when we saw the size of that one hit the screen earlier, and that stock is dropping $8 billion. They've got debt issues, also trying to revamp their business, focus on the renewable space as well. So that is getting hit hard. We're down 8% on Nat Grid, and we're also seeing Drax falling 7% as well, as a bit of a read-through. In terms of the earnings, you've been covering Wizz Air, that one doing pretty well. They are pretty bullish on the summer bookings. Obviously got those Pratt & Whitney issues that you mentioned. Julius Baer, bit of weakness in some funds, and Embrace in Sweden, once again, the gaming stock getting hit. Just a quick look at pets. Critty mentioned there. She's been supporting the pet sector with her dog food purchases, but that sector is down given the CMA announcing that review into the sector, a full review. There was some concern around that already. Then Unilever, finally we got a double upgrade, as they say in the trade. It was underweight, it is now overweight at JP Morgan. They recommend you should be buying this one. Unilever, of course, looking to spin off ice cream, also doing pretty well in their core business, but that one is gaining today. We're up 1.5% in London, £64 price target. It trades at about 51, so a lot of upside. Unilever gaining this morning.
Joe, thanks very much. Joe Easton from our equities team. Let's go to some macro data just breaking across the Bloomberg terminal. Mixed, really, coming through from France, but the focus maybe on a disappointment in services. So on the manufacturing side, it ticked up more than we'd anticipated, but on the services side, we'd expected a tick up, and actually it's dropped down into contraction territory. So below 50, the euro has dropped on that, not by a huge amount, but it's certainly off earlier highs. Coming up on the programme, we take a look at reaction to UK Prime Minister Rishi Sunak's summer election gamble. That's next. This is Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. To the world of business. Every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
Authorities could face bigger challenges next.
It was going to keep rating World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
This is Bloomberg.
Welcome back. 20 minutes into the equity market session. This is what you're looking at. A small bounce. Not a great deal of a bounce, but a small bounce. You're seeing the competing factors of the Fed and Nvidia play out in European equity markets this morning. Technology, certainly a big beneficiary of the Nvidia story, and you can see that in the sector breakdown this morning. We aren't seeing a massive effect. You are seeing some effect from the UK election story, particularly in the house builders, but elsewhere feels a little bit more muted. Maybe we'll get more as we work our way towards the July the 4th election. So the UK Prime Minister, Rishi Sunak, surprising everybody with that date. We've got a 6-week battle with the Labour Party, the opposition party led by Keir Starmer, with a significant lead at this point in time. Let's take you back down to Westminster. Lizzie Burden, our UK correspondent, joins us from there. Everybody seems to have been caught by surprise by this early date. Why July the 4th?
Well, Guy, even the Chancellor, Jeremy Hunt, seems to have been surprised by calling a July 4th election. Perhaps Rishi Sunak's hoping for better weather. Yesterday, he got absolutely drenched in Downing Street, and it didn't escape the newspaper's notice this morning. Drown and out is the headline on the front page of the Daily Mirror today. Look, what was Rishi Sunak hoping for by calling this snap election? Well, it's no coincidence that he called it on the day inflation fell to 2.3%, back to normal in his words. He wants to take credit for inflation coming down on his watch. Ironically, markets didn't see it the same way. They saw the inflation numbers yesterday, beats on the headline core and services numbers, and took it as a certainty that a June cut is now off the table. 12% was the pricing the last time I checked. But also, Rishi Sunak will have had an eye on the fiscal. The latest public finances data suggests there isn't going to be a lot of wriggle room for tax cuts in an autumn budget. But of course, he will have had an eye on the polls as well, Guy. As you mentioned, that poll lead in some counts 30 points and not closing despite the economic progress. So Rishi Sunak, as The Guardian says, taking an uncharacteristic gamble with an early election. But Starmer's task now, the opposition leader Keir Starmer, is going to be to turn that poll lead into votes, because he's got to execute the biggest electoral turnaround since the Second World War. if he wants
Lizzie,
to get
thanks very much. Bloomberg's Lizzie. Right, which she says he does. Lizzie, thank you. Bloomberg's Lizzie Burden on the green for us in Westminster. Let's bring in Bloomberg Opinions. Adrian Wooldridge, who's been writing about UK politics for many years and can give us his thoughts this morning. So, a bit of a surprise in terms of the timing, and you had to call it at some point this year. Lizzie was mentioning there what he has to do in terms of creating this swing from the Conservatives to Labour, but the polls suggest he's very much in the lead. Where does your focus sit when you think about where he has the numbers?
Oh, I think he's going to win. I think Starmer's going to win. I think he's a very long way ahead in the polls. I think that Labour is, they have a message, they have a coherence, they have a popularity in the country which is almost impossible for Sunak to overcome. And I actually think that Sunak didn't call this election for any real reason. The 2.3 number was not great. It was all right, but it was a bit less than the market was expected. I just think he's had enough, frankly. He doesn't want any more embarrassments with MPs crossing the floor or doing weird things as these Tory MPs seem to be inclined to do. He just thought, well, there's no upside here. So I think we're seeing the end of 14 years of Tory rule. We're about to go into a period with a Labour government, so it's an important day.
What changes public perception when it comes to the economy, though, given that inflation is actually coming down?
I think it's a very lagging indicator. I think people basically don't feel that much better off. They feel that inflation is still dragging on their incomes, but I think the overwhelming determinant of this election is not the economy, whatever Rishi thinks. The overwhelming determinant of this election is that people are tired of the Tory government. They've had 14 years of this. They've had a very, very anarchic government in power, and they just want to change. Now, this is not a vote for a Starmer government, really. I think this won't be a vote for a Starmer government. There's no great upsurge in enthusiasm for Starmer in the way that there was for Blair in 1997. It's a kick-the-bums-out election.
How similar is this Labour government to the Blair government that came in 97? Is it more comparable with the Brown governments that went out in 2010? How should I think about what this Labour government is going to
I think you should think of the Labour government as being closer to Brown than to Blair. Blair was a real reformer. He wanted to change the state. He wanted to make it more market sensitive. And he was essentially a neoliberal. I don't think Starmer is those things. He's to the left of Blair, but a long way to the right of Corbyn. So we should see it's a sort of a return to Labour as a party of justice, a party of being in favour of the poor rather than the rich, not a sort of party that's like a Peter Mandelson party of letting everybody feel their oats. But I don't think he'll do anything really crazy, radical. He'll be a steady as it goes person.
Adrian, great to see you this morning. Thanks for all the updates. We really appreciate it. Adrian Wooldridge from Bloomberg Opinion. Thank you very much. We've got a special podcast coming up, Voteromics. Make sure you listen to what is being said on that. Interesting stuff. Very interesting stuff, actually. Take a listen. This is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper.
I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
It's not game over for high inflation in the UK. As you've already alluded to, core inflation is still higher than it should be. And the main driver for the drop today is the energy price cap regulation we have here in the United Kingdom, which is welcome, but the Conservative ministers here shouldn't be starting a victory lap. And as we've been saying frequently in the Labour Party, we welcome the statistical improvements, but until people at home feel like the economy has turned a corner and they're better off, I don't think the voters here will think that the economy has turned a corner, no.
That was Darren Jones, UK Shadow Chief Secretary to the Treasury, speaking to us yesterday after the inflation report from the UK, before we got the announcement about the UK election being called, of course. Let's pivot over to the German economy, though, because we're gradually building a picture of where the Eurozone economy is this morning. We had the data out of France. Now we have the data out of Germany. And the French data sent the euro lower. This data sent the euro a little bit higher. I mean, it's all sort of oscillating around the flat line, but it bounced off the earlier French numbers. So manufacturing has improved a little, but still in contraction. Services also improving slightly in Germany, and that's in contrast to what we saw in the French number, as perhaps that comes as something of a comfort. And as I say, the euro bounces a little. Let's get back to the UK story, though. Our colleague Lizzie Burton, our UK correspondent, is in Westminster to take an economic look at where the announcement of the UK election leads us. Lizzie.
Thanks, Anna. Yeah, I'm joined in Westminster by Michael Saunders, former Bank of England policymaker and now a senior advisor at Oxford Economics. Lovely to have you back, Michael. We had that inflation reading yesterday, 2.3%. Rishi Sunak says inflation is back to normal. The financial markets reckon it's so sticky, a June rate cut is off the table. Who's right?
Well, I think a June rate cut is looking very unlikely after the inflation figures. The decision to call the election won't really alter that, other than in a very limited extent. The MPC would be especially reluctant to do a surprise rate change during an election campaign. I think that they would prefer not to do anything which by their own actions would be a cause of volatility. But look, in practice, a June rate cut is probably ruled off by the inflation figures.
So will there be any worry on the MPC about looking as if they're giving a helping hand to the government?
I think it's rather that with the inflation figures coming out higher than expected, they don't have the evidence to cut rates for now. But also, you know, there's no great rush. They can afford to wait for a bit more data to come through. And as I said, they themselves wouldn't want to be a cause of volatility.
Do you expect more members of the Monetary Policy Committee, your former colleagues, to join Swati Dhingra and Dave Ramsden in voting to cut in June?
Possibly, but actually I think unless the May inflation figures, which will still come out before the June meeting, are especially low, I think it's more likely that they would wait until August. But the MPC have set out the conditions for lower interest rates, that pay and prices have to come down more or less in line with the forecasts in the May monetary policy report. So far, the news has been a little bit higher than they expected. So it's really the evidence which you would need to see to change. before the MPC members' votes would also change.
Yeah, services inflation particularly sticky. What would be a healthy level to start to cut?
I think it's fair to cut rates gradually before pay growth and services inflation are back to target consistent rates. So a target consistent rate of pay growth would be about 3.5, services inflation probably about the same kind of pace. As long as you're reasonably sure you're on a path to that, then you can start to cut rates gradually, conscious that the lags on monetary policy are quite long, and therefore if you wait until everything is sorted, you've probably left it too late.
And just thinking again about the election, does Keir Starmer, if he wins, have the fiscal room to grow the economy significantly in 5 years?
Well, this is going to be the big challenge for whoever's in government for the next few years. The UK has low potential growth, which means the trend growth of tax revenues is quite low. There's strong pressures for higher public spending from the ageing population and increased need for defence spending. And we've got to get the public finances back onto a sustainable path. Now, trying to reconcile those three is going to be a difficult task for whoever's in government. The best way to do it is to do measures which can raise the economy's potential growth. Then tax revenues will be stronger, the public finances will improve, and you'll have more money to spend on public services.
But of course, growth is something that both parties agree we need. We haven't had the election manifestos yet, but knowing what we know so far about Labour's plans, do you think that financial markets will be worried by a new change of government?
So I think financial markets and international businesses will be extremely relaxed about the prospect of a change to a Labour government. Now, that's partly because Labour themselves are viewed as a moderate centrist party. It's also because the Conservatives have perhaps lost their previous claim to be the party of economic competence after the chaotic period of the last few years. We've had, 5 prime ministers, 7 chancellors. Honestly, I've lost track of the numbers of business secretaries, housing ministers, and industrial strategists. So, I think probably investors would perhaps breathe a sigh of relief.
And I mean, you rub shoulders with these business leaders all the time. They're your clients. Do you think that Labour has now become the party of business?
To an extent, yes. I think yes. I think that they've made quite a marked shift in the last few years. But it's also, as I said, that the Conservatives have foregone their previous claim to be the party of business of economic competence.
And Rishi Sunak hasn't recovered that?
I don't think really, no. Look, GDP per head in the UK, which is a key driver of living standards, is still lower than it was in 2019. Now, I wouldn't call that a successful economic strategy.
Okay. What's the one economic policy then that you would advise any party to put in place that would make a significant difference in their manifesto?
So I'm going to cheat slightly and I'm going to go for 3. Closer trade links with Europe, higher public investment, and build more houses.
And the housing policy of Keir Starmer, do you think that will, or the Conservative Party, do you think that it will make much of a movement in the housing market?
Well, the key thing is to make it easier for people to buy a house and thereby move to where the jobs are. And that improvement in labour mobility would help businesses to hire, to invest, and improve the economy's potential growth rate. Now, the Conservatives have at times talked of higher house building, but actual house building has been really low. So a government which puts higher house building as one of its key aims, I think that would help to improve the economy's long-run potential.
Would it lower prices, though?
It would lower prices, but the key mechanism is to make it easier for people to move, to seek job opportunities. And that helps firms to hire, helps businesses to invest, allows new opportunities to expand.
Okay, Michael Saunders, economic advisor at Oxford Economics, with a little view on what we might be able to expect from the election manifestos from both parties. We'll wait for them to come up. Back to you in the studio.
All right, Lizzie Burden there again, as she said, with Michael Saunders. We thank you so much for bringing us the interview this morning. Coming up on the program, the UK's National Grid plans to raise almost £7 billion to help fund a massive investment program. We're going to dive into the details next. This is Bloomberg.
Let's suppose you're on a plane and somebody realizes who you are. They say, I have $100,000. I don't know what to do with it. Where should I invest it? Where should they put their money?
So today, it's a easier decision than it was maybe 2 years ago, because Treasury bills are 5%. So I would say, regardless of how much risk you want to take, you have to put a portion there. Then you would have to ask, really, an individual is the same, I think, as any institution. What is your time frame? Do you need to get access to this $100,000 in the next few weeks, the next few months, the next few years, not until you retire? And that will determine your investment decision.
So what do you think is the most common mistake investors make when they have 100,000, a million, or whatever they might have? What is the most common mistake you have observed that investors make?
I would say hubris and thinking you know more than you do, because every decision that you make has many, many layers. So as you're creating a portfolio, look at the risk as well, not just excited about the return.
And what's the best investment advice anybody's ever given to you?
Continue to learn about innovation in whatever you do, because that is where it's not exciting, that's where returns will go.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Good morning, welcome back. 41 minutes into the equity market session. Stocks really haven't moved very much in terms of what we are seeing. Let me give you a few 52-week highs. Allegro's up quite nicely. Some of the defence stocks are really moving quite sharply this morning in terms of the 52-week highs we're seeing there. Unilever on a double upgrade at a 52-week high. And unsurprisingly, ASML International, some of the chip stocks doing very well too as well. One stock that is certainly suffering, but maybe for the right reasons, is the UK's National Grid. It is planning to raise $6.8 billion in capital as it seeks to invest $60 billion in the energy transition over the next 5 years. The plan basically is to help strengthen Britain's power grid so that we can plug renewables into it, we can plug our cars into it, we can plug our NVIDIA chips into it. Let's talk about this and kind of what the story looks like going forward. We're joined now by Bloomberg Senior Executive Editor for Energy and Commodities, Will Kennedy. This seems entirely logical. We spend so much of our time talking about the power demands that are going to come from server farms. We spend a lot of time talking about the energy transition and the need to plug renewables into the grid. National Grid is the kind of the bit that plugs it all together, isn't it?
That's exactly right, and I think grids are going to be a big focus for the world as we go through the energy transition. BNEF had a piece of research this week that explained that we're going to need to spend as much on grids as renewables if we're going to make the energy transition work, because power demand is rising, driven by electric vehicles, driven by data centers, as you say, and renewables create a huge amount of power. If we think about the UK, though, that power is all in the North Sea, and you've got to move it to the parts of the economy, i.e. London and the South East and industrial areas in the Midlands, where it's most needed.
Can I ask you about the timing of this, Will? Because this strikes me as quite fascinating. Just the day we get this quote-unquote huge issue, just the day after we got an election announced, and, traditional logic might dictate the capital markets activity is a little subdued when there's electoral uncertainty. I'm looking at the FTSE 100 underperforming today. It's down 19 points, but actually 15 points of that is National Grid. It's taking a chunk off the FTSE. I mean, talk to me about the timing. Does the election just not matter in this context?
Well, I think people had been expecting National Grid to make this kind of move, and I think they've probably been talking to their shareholders about it for some time. I think the grid story will come into play no matter who wins the election. Clearly, if the Labour Party wins the election, which is what the polls think at the moment, they are committed to the rapid decarbonisation of the grid, which will require the kind of investments that we're talking about. But I think they would have probably needed to do this no matter who wins the election. So in that sense, the timing for National Grid isn't very important. It is a very big capital raise. I mean, you're talking about a company that has a market cap of 36 billion. Its equity value on its balance sheet is 30 billion, and they're raising almost 7. So, you know, this is
unprecedented, according to Jefferies.
A real serious beefing up of the balance sheet, and I think shows just how much investment is going to need to be done. Should also point out that a lot of that investment will be in the UK, where over half the investment, but they have a big US business too, where they need to invest in grids in the northeast. And when I've talked to National Grid, a lot of that is driven by demand from things like chip factories, which are being built in that part of the US. So these themes that we talk about all the time are really, you know, seen in this deal.
But what does that exposure abroad even look like? Because in that same statement that they're talking about the capital raise, they're also selling their onshore wind business as well as their LNG terminal there as well. Yeah. Why? What's the reasoning there?
With the LNG terminal, I mean, they used to be a very big gas player. I mean, they've sold some of their gas distribution assets. I think they probably feel like that's not essential to the future of the business, and that they want to use that as an opportunity to raise cash elsewhere. And I imagine they have the same feeling about the onshore wind business, that it's non-core, that the direction of the business is building these high voltage power networks, both in the northeast of the United States and here in the United Kingdom.
All right, Bloomberg Senior Executive Editor for Energy and Commodities, Will Kennedy, walking us through the National Grid story. Those shares, of course, still lower and dragging the FTSE down, as Anna mentioned earlier. Let's take a look at what else is on the agenda today. At about 9 a.m. London time, we continue to get those Euro area PMIs. We're already getting numbers out of France and Germany as well. Creating a little bit of volatility in Europe. We'll see if they are in the Euro, excuse me. We'll see if that continues into the 9 and where ultimately the Euro actually stands. At 12 p.m., you got UK time. You have Turkey rate decisions. 1:30 p.m. London time is shift focuses to the U.S. Initial jobless claims, new home sales, plenty to deal with there. I keep coming back to the fiscal story, though. The G7 finance chiefs meeting in Italy, does that yield more context, more clarity around the path of maybe how this market is even tradable, what the future of European money looks like?
What is the future of European money? I think they're going to
investment and
no. What are they going to do? Are we moving towards an idea where we're going to be funding defence jointly? Are we moving to an idea where we're going to continue to fund the energy transition jointly? I think these are key questions that they need to answer. In order to get that over the line, they need to figure out all kinds of other factors. I also think Ukraine's going to be fairly dominant at this meeting in terms of the financing story around that. This idea, and Anna, you were talking about this the other day, that Germany's getting on board with the idea that actually you can use the interest that is being thrown off by Russian assets maybe to help Ukraine and its efforts to fund the war.
Yeah, absolutely. And we know that the US has been pushing for this, according to our reporting, and so we could see progress on this at this G7 meeting in Italy. That's certainly going to be one of the areas we focus on. Also taking place today, we have, talking about the role of politics in markets right now, the EU, the European elections, of course, we're gearing up for those as well as a UK election, and we're going to see EU an election live debate taking place today. So that'll be something to watch in terms of the people who want to lead the European Commission, what they're going to be focused on.
This seems to be flying under the radar to me a little bit. UK elections coming up, we're going to see some big debates. We're going to be focusing on that. We've got a US election coming up. We're going to see some big debates. These are going to be events that we're all going to tune in and watch. This feels like it's flying under the radar a little bit. Ursula von der Leyen has had a meaningful impact on policy. I appreciate that Europe is run by governments, not by the Commission, but the Commission has a significant impact here. And her impact, everybody else's impact within the Commission has been substantial. Look at what's happening in terms of competition policy and all these other things.
Cars out of China.
Precisely. The tariff story kind of, and it feels, I'm always stunned how little attention is maybe paid to some of these events that happen. And then later we go, oh yeah, that looks really important.
Can I put my Spanish correspondent hat on for
Absolutely.
a moment? I have to.
We're actually going to get you one. That is coming.
Right next to my Dow 40,000 cap as well. This is really important, especially when it comes to the context of Spain. There are deals going on in Spain right now. We have the BBVA Sabadell, we've got Telefonica, we have government stakes that are kind of being put on pause right now to know how much the result and the influence that Pedro Sanchez has off of the back of these European elections. There's a very clear market read-through that kind of been put on ice for a moment until we figure out not just the regulatory story out of the European Commission, but how that reflects back into some of the deals for state-owned stakes.
Shall we get back to the conversation about how the Eurozone economy is recovering to some degree from the shocks that have been thrown at it over recent years. We've got some PMI data out this morning from Germany and from France. Mixed reaction in markets to that, from that mixed set of data, really. Let's go to the German side. German private sector activity is growing at the fastest pace in a year as the country's industrial malaise perhaps abates a little. Joining us to discuss this morning's PMI data, we have economy reporter for Europe and the ECB, Jana Randau. Jana, good morning to you. So we saw the euro whipsawed by this data. First, we got the French data, where it seemed to be the services contraction stood out to me as a disappointment. And then we got Germany kind of saving the day and the euro goes higher. I mean, it's either side of a flat line, so it's not particularly drastic moves. But what was your takeaway then, top line takeaway from this data set?
Yeah, so the top line very much confirms what we've seen over the past weeks, that the economy is gradually recovering, and Germany is a particularly nice surprise this morning, of course, seeing services doing much stronger than expected, manufacturing coming out of its slump finally. It's been there for way too long. And even France, even though it disappointed the overall private sector economy falling back into contraction because of weakness in services, even France, there is some underlying positive news in these reports. We've seen in both countries, actually, orders rising for the first time in about a year. We're seeing employment rising. We're seeing confidence solid in France. We're seeing it improving in Germany. And what's probably very important is that the news from the price side, from the inflation side, is not getting significantly worse. So that's the good part, actually. And the nowcast built on these PMIs suggests second quarter growth for both economies around 0.3%, a pickup from the first quarter, which was already better than expected. So you're seeing an economy gradually finding its feet, wobbles here and there along the way, but knowing that those two economies were the weak spots of the Eurozone economy for a very long time, and growth was actually a lot stronger in Spain, in Italy, in the periphery. It's overall very good news.
Jana, how much do these numbers reflect an already priced, i.e. it's already in the system, an ECB that's going to be cutting rates? To what extent are the markets, are companies front-running that expectation that rates are going to be coming down, that the cost of money is going to get cheaper?
Yeah, so a lot of what we've seen on the confidence side and confidence indicators from investors, from businesses, from consumers, a lot of that pickup over the past weeks and even months, that was clearly built on expectations that interest rates would fall down and retreat over the course of the year. So in that sense, that is priced in, that is expected, and the ECB has signaled between the lines that it is planning to deliver those rate cuts. Economists expect around 3 cuts this year. Markets are more or less on track with that, and policymakers, from those who've heard, we also see a consensus, if you want, emerging around that kind of a trajectory for interest rates. So that is very much built in, which means it's important for the investment outlook, spending that is coming, especially in the manufacturing sector, but also in construction, where we have yet to see, after a rebound at the start of the year because of the weather, where we yet have to see a continuation of that trend. So very important. What we saw today will help policymakers find the confidence to cut, of course, in June. And one other thing that I want to alert you to is, of course, wage growth data that will come out in just over an hour, and that will be truly interesting to look at, to determine not what happens in June, but what will happen afterward.
I was just about to ask you that, Jana. What happens after June 6th, of course? And I'm curious especially about the strategy here for the ECB. Is this you cut once, you open the floodgates to cutting consecutively, or do we see a kind of more Fed-like approach where it's cut once, wait a little, cut again, hold, like that kind of alternating approach? Is there any indication from the ECB what strategy is more lucrative?
Yeah, I mean, the ECB has been very, very clear in saying that any decisions or all decisions really will be taken on the basis of incoming data, on the basis of economic forecasts. And those forecasts are available on a quarterly basis. June will be the next set. September and December will be the ones to follow. And a lot of what we heard over the past couple of weeks suggests that that rhythm, that quarterly rhythm, is what a lot of policymakers are having in mind to get that confirmation, essentially, that they're on track, that inflation is coming down to the target, because what we will see over the next couple of months is very volatile, a very volatile trend. So inflation will go up, it will go down, it'll be difficult to read, and I just don't think they're in a terrible rush, and certainly what they don't want to do is make a mistake and ease too early and have to go back and hike all over again. So caution is the word that they're probably going to use to describe it. So I would expect quarterly steps.
Jana, great stuff. Thank you very much indeed for updating us. Jana Randa joining us out of Frankfurt. You fold the Fed in to this whole story. How far can the ECB really go? It's going to want to be cautious. Various participants willing to tighten more if needed. That continues to be the line that stands out of the Fed minutes.
Yeah.
Imagine you're in a scenario where the ECB kind of does a cut and then the Fed starts maybe firming up the idea of it's going to hike. That is bad.
Right, and I take us back to the conversation we had earlier on this week with Mark Cudmore and others around the RBA and the RBNZ. And there are central banks in various geographies that are not afraid to shine a light on their conversations of at least talking about whether hikes might be necessary again.
Well, suddenly guiding the markets seems to be more important, right? It kind of feels like the more clarity that they're able to offer, they're almost offering too much clarity, where you're seeing so much division and so much spread out opinions that the markets don't know what to do with it. I think what's interesting, though, for the Federal Reserve that other economies don't have is that they have a massive blackout period. We had Ken Kinsell talking about it right after July, August. They have their hands tied till December, and anything can happen, and they can't really do much about it.
Yep, the election will be coming up. That'll certainly be a factor as well. Difficult. I still come back to this idea that Powell sounded much more dovish than the minutes did. And I'm struggling to understand, therefore, where the centre of gravity is at the Fed and whether this risk of hikes is real. Because if it is, it changes the equation for so many central banks around the world.
And that seemed to be what spooked markets just a little yesterday, wasn't it? Have we been reading too much into Powell's ability to speak for the whole of the Fed and the whole of the FOMC? And maybe that's not the case. And so we continue to focus on individual voices, I suppose, from the Fed. I'll let you do this bit, Guy, because you're excited about this.
Ferrari is coming up. The Francine Lacroix is about to talk to the Ferrari CEO.
That's all you need to know, really.
I want to stay on set. I want to be part of this conversation. Anyway, I'm going to leave it to Fran. I'm really looking forward to hearing what he has to say. That conversation coming up in around 10 minutes' time. The market's going to focus on the Fed-Nvidia debate today. We'll see how that one turns out as well. But Ferrari's coming up. Stay tuned. The Pulse is next.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. weekdays. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry. And
crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From the world of politics to the world of business. Every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything. Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. NVIDIA could be on track to add around $140 billion to its market cap as a chip maker posts a bullish forecast for AI computing. Lenovo, the world's leading PC maker, tops estimates with higher demand for its AI products. We'll discuss with the company's chief financial officer later this hour. Plus, the British Prime Minister, Rishi Sunak, takes a gamble by calling a general election on July 4th, with his party more than 20 points behind in the polls.
Now is the moment for Britain to choose its future, to decide whether we want to build on the progress we have made or risk going back to square one with no plan and no certainty.
Also coming up in the next few minutes, we've been looking forward to this all week. The chief executive.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Hi, I'm Laurie Haynes, CEO and co-founder of Shirar, and I'm really excited to tell you that we are going to be raising funds for Shirar again. After a successful raise in 2023, it's time to scale.
We hope that you enjoy the pitch deck and the financial model. Any questions, please don't hesitate to ask us, and we can't wait for you to be part of Shirar.
Business cycle,
But I think going ahead, people are asking questions such as, can the supply keep up with the demand? And also, can NVIDIA broaden its client base beyond kind of a lot of those big kind of cloud service providers that we all know about?
And then, Justina, we have two other stories. I mean, J.P. Morgan's Jamie Dimon once again warning on the U.S. economy that we're too complacent and we could potentially see a hard landing. And then at the same time, China trying to support a lot of the sectors in trouble.
Yeah, exactly. I think an interesting question that's come up with the U.S. economy is that we are starting to see a lot of data points kind of actually turning for the worst, even though inflation hasn't really cooled. And I think that kind of brings forward, the S word, the stagflationary narrative. We're not there yet, but I think the question here is, could we get sticky inflation, but also growth coming down at the same time if a lot of that inflation is in fact driven by supply side factors?
Justina, as always, thank you so much for a terrific roundup of the main market moving news, Justina Lee. Now, coming up, the exclusive conversation with the man overseeing a new era at one of the world's most famous car brands. The Ferrari chief executive, Benedetto Vigna, joins us next, and this is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in? I'm in.
I'm in. We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Well, the conversations that matter, the insights you need. This is A Pulse, and I'm Francine Lacqua here in London. Now, my next guest is in charge of one of the world's most iconic companies. We're, of course, talking Ferrari. The luxury car maker, famous for its roaring engine, has started a shift to battery power. Now, it's building a factory to make hybrid and electric cars that will be ready next month, with the first fully electric model expected late next year. But Ferrari is still relying on its profitable combustion engine vehicles also to protect margins. Well, I am delighted, so is the newsroom, to be joined by Benedetto Vigna, the company's chief executive. Benedetto, thank you so much. It's so nice to catch up with you again. I think we spoke a couple of months ago on leaders. Talk to me a little bit about electrification. So you weren't the first one to jump on this bandwagon. Do you now have an advantage for having been a little bit more cautious?
I think that electrification journey in Ferrari started a few years ago. It was the case of Formula One. It was the case of supercar in 2013. It is the case of 4 hybrid model. Actually 6, if I consider the special version. They are having a tremendous traction on the market. Just considering Q1, almost 50% of the cars that we sold in Q1 are hybrid. So electric car is the next step in our roadmap.
But so are you happy? I think last time we spoke, you were talking to me about secret protocols and the secret car.
I'm very happy.
You're very happy.
I'm very happy.
Give us what are you most happy about?
I think the car we are setting up is a car that is unique in all the respect. Let's put it this way. Our electric car just goes beyond the basic electrons and byte that everyone is talking about. There is much more in a car, but you have to wait till Q4 next year.
No, I know, but is it what is it? Are you replicating sound? Is it the way it drives?
We don't like to mimic what is typical of another world. We are interpreting the technology in a unique way. Yeah. Electric engine is not silent. Electric engine can deliver some emotion that usually in the mass market car that you have today, you don't find it. So it's up to us to interpret this technology in a unique way, to make something unique.
So has it exceeded your expectation? And do you think that will translate into sales?
It's on the way there. It's on the way to exceed. We still have some time. We are on the right track. I'm satisfied where we are. You know, the final judgment is the client. The client is the most important asset for a company because also they are the final judgment. I think the client will look it, will like it, but we'll see.
You already have orders, or do you
No, we don't take orders. We take the orders. We take orders only when we launch it. It's the same story of the 12 cylinder we announced a few days ago.
But give me a sense of, there's now this war basically on EVs between China, the US, and Europe is also in the middle. What does that mean for the electrification of cars in general?
Look, maybe yes, there is people are defining it as a war. I think for me it's a nice competition. Okay. For me, this is a call to action for Europe. It's a call to action to become more, how can I say, pushy, less complacent. And in my life, I've been always taught that if someone is faster than you, better you are faster than them. And if you want, this is also what we are doing in Formula One. In racing, that's what you have to do. If someone is faster, be faster than them. Don't try to stop them.
Faster and better.
And better, yeah, sure.
Because if you're not, if you're not better, then it's tough, right? Does Europe, you think, have a natural advantage in this?
But faster, in any direction. Call it product innovation, call it customer intimacy, call it cost leadership. When I say faster, to visualize on a track, but in all the direction that make unique a company, in all the direction that, if you want, are the pillar of the sustainability of a company.
But do you worry, you're dealing in supercars, right? This is like the top of the top of the top.
Yeah.
If people buy less electric cars at the kind of base level, does it make a difference to the attractiveness of your cars?
I don't think so. I don't think so. I think that for a company like ours, it's important that we take the three colors, the red, the blue, and the green, and we show the client that we can harness them in a unique way and deliver unique emotion. I think that we don't sell, allow me to say, technologies. We sell emotions. And then technology is a way to deliver unique emotion to our client.
Of course, this is what luxury companies say. They sell emotions, the desirability. But what kind of client do you think is attracted to the electric Ferrari?
I think that we will have three kinds of clients. We will have a traditional client, some existing client of Ferrari that will not take an electric car. Then we will take existing client that will say, you know what, I will take also electric, like I took hybrid and IC. And then there are clients to whom I already talked that are saying, you know, I will be part of your community, of your family, if and only if you will be able to offer me an electric car. I think these are the three kinds of clients that I'm sure we'll find in the future.
But, is the last one harder to find?
I have to say that I have already met tens of those people that are waiting for our green car, allow me to call in this way.
Younger clients, or does it, or is it more by region? Does it make
let's say, I would say, maybe younger than 50, yeah. But there are also people I have in mind between 50 and 60 that are willing to take this kind of car.
But talk to me about, so IC, what goes, what kind of models are you working on? What happens to that over the next 10 years?
What I would like to...
You're amongst friends.
Yeah. I'm sure. I like to have this kind of question. We keep going with the plan we shared with in Capital Market Day 2 years ago. We said that we'll keep going with the 12-cylinder, we have the 8-cylinder thermal, and then we have the 6 and 8-cylinder hybrid, and then we are adding this platform. I think it's important for a company like ours to go ahead with this platform and to look at the car just, beyond electrification, digitalization. There are many other things you can do in a car, and that's what we are doing.
So in 10 years, how many? I mean, do you already have an idea, or is 10 years too far away? Should I ask
It's a little
about
bit too
5
far
years?
away.
5 years?
What I would like to say, that prefer quality of our revenues and our P&L to quantity. Let me say it this way.
Fair. Benedetto, when you look around the world, you know, we talk about inflation. That's not something that touches a lot of your customers. We talk about the worries about geopolitics. Does it impact the demand, or does it make the cars more desirable?
We did not see any impact on this. I think we have to be watchful. We have to keep always to be watchful to make sure that we are on track. As of now, we don't see any impact. Clearly, we have to manage some increase in price, in cost of energy and material. We are working on that, but it's the beauty of the life, you know? You have to cope with the situation that you don't know. But if you know everything, it's not fun.
It's not fun. What do you worry about the most?
I think that what is important for us is that one point, we are a successful company, a successful team. We need to make sure that we are always with 4 wheels on the ground. We have always to listen the weak signal from the external world. We have to care really about the sustainability, like we are doing, and then we don't have to teach. We have to learn. I think this is very important, because when you are in a successful team, you may lose the compass. You may start to believe that whatever you do, you will be successful, and this is not good. We have to be 4 wheels on the ground.
Like humble, I like that, 4 wheels on the ground. How do you deal with the China strategy?
How do you?
China, how do you deal with?
China for us, it's, we said 2 years ago, China overall, China, Hong Kong, Greater China will not go beyond 10% of our sales. Why? For a couple of reasons. One is because the market in China is still not mature. We need to give it time to mature. And the second, because it's a little bit decretive on the margin side for the profit and loss. But really, we need, for each country, we need to give the time to mature. There are other countries also that are showing good growth. And also there, we have to proceed in the right way.
But, I mean, the China template could be a little bit different to other markets, right? Because there's a crackdown on some luxurious, brands. So again, how do you see that evolving? Is it like a stop and start?
I would like to say in this way, China is not for Ferrari what it is for other luxury brands. In other cases, you have exposure that is more than 20%. In our case, it is less than 10%. It will stay less than 10% for the reason I told you. For sure, we have also people from that nationality buying outside. But I think, let's say, there are a couple of things I'm particularly proud of the last Capital Market Day. One is to keep China below 10%, and two, to keep going with the 3 colors in our product strategy.
Formula One this weekend, Monaco, this is the big one. Are you worried about the Red Bull gap getting a little bit smaller?
I think that this year, we are in a better situation than 1 year ago.
Yeah.
Because if I see the last 7 races, we took 7 podium. In one case, we took 2. In other case, we took 0, but we took 7 podium. We cut the distance between us and the first one by factor 3 versus last year. So I think the team is doing a decent process. We are on the right track.
So you're confident for Scuderia?
I think there have been substantial progresses. We have to keep improving, like we have to keep improving in everything we do. I mean, this is the beauty of life.
This is a nice philosophy, full stop. Benedetto, as always, thank you so much for joining us. That was Benedetto Vigna, the Chief Executive of Ferrari. Now, the Ferrari Chief Executive will also feature on the new episode of Bloomberg's new Italian podcast series, jointly produced by Cora Media. It's a 10-part series in Bloomberg's first local language podcast, and it's called Quello che I soldi non dicono. Coming up, the world's leading PC maker actually beats estimates with a little help from artificial intelligence. Up next, we interview the Chief Financial Officer of Lenovo. This is Bloomberg.
top names in tech are on Bloomberg.
There's a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show. This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg.
Now, NVIDIA, the chip maker at the center of an artificial intelligence boom, has gained after bullish sales forecast showed that AI computing spending remains strong, while second quarter revenue will be about $28 billion, topping the $26.8 billion predicted by analysts. Now, results in the first quarter also beat projections lifted by growth in NVIDIA's data center division. Now, we'll have plenty more, of course, on AI and some of the support that it's been giving markets across the board. It is pretty incredible, actually, to see that this stock has gone from strength to strength, delivery on some of the AI hosts, but also really igniting the stock rally worth $140 billion. Now, this is what NASDAQ futures are telling us right now. They're up again. They're climbing after this upbeat earnings from NVIDIA seems to have reinforced optimism over the global artificial intelligence boom. Now, a couple of other things we're watching out for is, of course, the data we had in Europe on services, manufacturing, and consumer confidence. And then a couple of the other things that we're watching is, for example, sterling on the back of Rishi Sunak yesterday calling for that election on July the 4th. It's a general election. Now to some other stories making news today. And consumer spending growth may have slowed, but not, I repeat, not for Taylor Swift fans traveling to Europe for the singer's Eras tour. Now, Bank of America says its customers spent 22% more in Paris this month when the singer's tour was in town. Swift performed in the French capital from May 9th to May 12th, just when the jump in spending registered. Well, European cities can look forward to a similar boost as fans flock to upcoming tour dates, including London, Milan, and Vienna. Now, shares of Live Nation fell in late U.S. trading as Bloomberg revealed the Justice Department move seeking the breakup of the business over antitrust violations. Well, Live Nation, the biggest U.S. concert promoter, merged with ticketing giant Ticketmaster in 2010. Sources tell us the case is related to Ticketmaster's unrivaled control of concert ticket sales. Now, the merger of the two companies has been the subject of several antitrust investigations in the past. And Bloomberg has learned that Eni is studying a sale of its 20% stake in biorefining unit Enilive. Well, the Italian energy company is working with advisors and is said to value the whole business at about 10 billion euros. Well, Eni is in the midst of a reorganization to help fund a transition to gas and renewable energy. So NVIDIA also announced a stock split and raised to its dividend. Bloomberg's Ed Ludlow has the details.
NVIDIA is supply constrained, meaning that demand for its AI accelerators is still outpacing its ability to supply. So when you look at the guide for the fiscal second quarter, sales of $28 billion plus or minus 2%, it's also interesting to look at where that demand's coming from. The story to this point has been NVIDIA selling high-performance GPUs to the hyperscalers, those 3 or 4 big names that operate the data centers behind cloud computing. But that's changing. They're starting to do business with consumer technology, enterprise, government customers, and the market for generative AI in that sense is growing. The 10-for-1 stock split effective June 7th is also interesting, right? This is a stock that trades north of $950 a share. There's a lot of interest out there from the retail investor in the AI story in NVIDIA. You just need to take a cursory look at Reddit or X or even Google Trends in real time during the earnings call, and it's what people are talking about. Beyond that, the big piece of news probably was that we will see meaningful revenue, a lot of revenue from Blackwell this year. Blackwell is the combination GPU, CPU, the latest generation of AI accelerator from NVIDIA that's becoming much more of a systems vendor, really. But the chips will start shipping in the current period, ramp in the fiscal third, and actually go into data centers in the fiscal fourth. And NVIDIA's proving that if the demand's there, it can also keep up in terms of just innovation, bringing a new product to market at a cadence of 1 a year. All eyes continue to be on NVIDIA. This is Ed Ludlow for Bloomberg News in San Francisco.
And they're on the very latest of NVIDIA. Now, Lenovo has reported a third successive quarter of better-than-expected profit. The world's leading PC maker has been buoyed by a rebound in demand for PCs and servers driven by AI. I'm delighted now to be joined by Wang Weiming, the Group Chief Financial Officer at Lenovo. Thank you, sir, for joining us today. Can you talk us a little bit about how this AI boom that's helped you in the latest quarter will continue to do so? What are you most optimistic about the products and services you sell?
Yeah, we definitely have we have 3 business groups, the IDG, which primarily in device, and then we have the infrastructure as well as services. All those 3 business groups will benefit from AI. I think we are leveraging on using AI in our devices. We announced our first AI PC, I think about 6 months ago, I think in CES, and then we also, I think in our Tech World event, I think couple of months ago, I think getting all the industry players, NVIDIA, Intel, so on and so forth, that actually really sort of introducing the AI, I think, in PC. And we actually launched our AI PC in China a few weeks ago, expecting to launch. Now, at the same time, go without saying that the infrastructure will obviously have a whole host of products that actually be able to meet the demand. And more importantly, I think our third business group, which is the services group, would actually bring in a lot of services to our customers.
So, sir,
be able to use AI.
It's amazing because actually Lenovo was one of the earliest to introduce these so-called new AI PCs, right? As you're saying, this new category, which you seem to suggest is also doing quite well in China. But do you think their benefit and their popularity has already been proven, or is it still early days?
Sorry, I missed your second part of your question. You're saying we are popular in China. I missed your second part of your question.
Yeah. So the question is, given the results and given that you've already rolled out these new PCs powered by AI or with AI features, has their popularity been proven? Are you confident that their popularity will increase?
Well, on the initial market feedback, I think that was a well-received product. I think because I think our AI PC obviously have features that actually meet the requirements of the customers. As I said, we announced our AI PC a few weeks ago. I think the initial response from the market is very positive, and we begin to start shipping out, I think, later this month or probably, I think, in a matter of weeks.
So what do you think is most appealing? And again, how many more iterations of these products will we be able to see?
Well, sorry, I think that I'm probably getting not clear your question. Are you asking what's the shipment is going to be like? Is that what your question?
I'm asking you, I think the line is not the easiest. I'm asking you how many more products that will use AI will grow. So I'm trying to get a sense about how much you're expecting this market to grow in the coming years.
Yeah, I think using our own definition, because at the moment, AI PC, I think different companies using different definition. I think we actually use a very tight definition. I think have certain features that we consider AI PC. I think for Lenovo, we expect that we will obviously have a whole portfolio of products, but initial shipment in the current fiscal year probably will be in single digit, and then we'll grow into double digit. I think up to IDC at the moment expecting that the market will probably have about 50–60%. I think in two, 3 years time, we believe that is probably we will definitely follow that trend.
So the electronics industry has largely bounced back. Do you think this is a new trend? Do you think it's bottomed out, that things will get better for electronics in general?
Well, definitely from a PC perspective, we are very confident, or we have very strong evidence. I think that AI, or the application of AI, I think is going to have a major impact, I think, in the PC industry. Now, we actually saw, and the other evidence that we see that when you call bounce back is when you look at our result. We look at our own results. We have a very challenging first half of the 23-24, and we begin to see the rebound in the third quarter, where the group actually reported, I think, growth in revenue. This quarter four, we actually see all our three business group. I think the device group, the enterprise group, as well as the services, they've all been actually growing through year. Now, looking at, I think, the order book, I think talking to customers, I think we are very confident that this trend will continue.
Thank you so much, Wang Weiming, the Lenovo Group Chief Financial Officer there. Now, up next, Bloomberg UK and the challenges facing the Prime Minister after he called a general election. Well, good morning, everyone, and welcome to Bloomberg UK. I'm Francine Lacroix here in London. Now, the race for number 10 is underway. The UK Prime Minister fired the starting gun yesterday afternoon, announcing a general election for July the 4th.
Now is the moment for Britain to choose its future, to decide whether we want to build on the progress we have made or risk going back to square one with no plan and no certainty. Earlier today, I spoke with His Majesty the King to request the dissolution of Parliament. The King has granted this request, and we will have a general election on the 4th of July.
Now, the surprise move apparently even blindsided some of his own ministers. And now a 6-week battle for the future of Britain begins between Rishi Sunak's Conservative Party and Keir Starmer's Labour Party. Now, Sunak will fight the campaign in the belief that the economy is going to pick up further, but with the Tories trailing Labour significantly in the polls, and after bruising defeats in local elections, it will be an uphill battle for the PM. Now, meanwhile, Starmer will argue that the next government faces the worst economic inheritance since World War II.
Our offer is to reset both our economy and our politics, so that they once again serve the interests of working people. We totally reject the Tory view that economic strength is somehow gifted from those at the top. Over the past 14 years, through all the crises we've had to face, sticking with that idea has left our country exposed, insecure, and unable to unlock the potential of every community.
Well, let's bring in Lizzie Burden, our UK correspondent, who's at Westminster. Lizzie, you were at Downing Street yesterday. Why has he chosen July the 4th?
Well, Francine, I think it's fair to say that when everybody rushed down to the rainy Downing Street yesterday, most of Westminster were surprised he picked July the 4th. As you say, even some of his ministers were blindsided, including his own Chancellor, Jeremy Hunt. Why did he name the date? Well, it means that there's no more speculation about when it's going to happen and who's going to lead the Conservatives into the general election. And why did he pick July the 4th? Well, yesterday was the day inflation came down to 2.3%. He says that's back to normal. Plus, the recent late public finances data suggests there isn't going to be much wriggle room for tax cuts before an autumn budget, before an autumn election, which is what many were hoping. But really the truth is that poll lead that Labour's got over the Conservatives has not been narrowing, it's only been widening. So now the challenge is for Keir Starmer, the opposition Labour leader, to turn that poll lead into votes. And that in itself is going to be a real challenge, given that the performance of his predecessor, Jeremy Corbyn, in 2019 was so dismal. It's going to be the biggest post-war electoral turnaround since the Second World War if he just wants to get into Downing Street. Interestingly, just behind us, there's a man taking bets on the outcome of this election. You know, day one, it's already started. The odds on a Labour majority, 2-9. No majority, 11-2. Conservative majority, 33-1. This is Betfair Exchange. And they say that they've taken more bets, not more money, more bets on no majority, which suggests that there is a lot of people out there who think that this could not be a big majority for Keir Starmer. They just don't want to put too much money on it because they don't think it's the most likely outcome.
Lizzie, thanks so much. Lizzie Burton there in Westminster. Now let's talk to Simon French, Panmure Gordon's Managing Director and Head of Research, and Bloomberg's Alva Ray. There's so much going on because July the 4th kind of took many by surprise. Alva, some were saying actually it makes sense because of the inflation, because there's not going to be any tax cuts in the next budget. Like, is this a good plan? We also hear there's not, I mean, MPs may not be ready for this.
No, and as Lizzie mentioned, we reported this morning that even Jeremy Hunt was surprised by and kind of blindsided by this news yesterday. His allies actually thought, with all the speculation that there was something happening at 5 p.m, that maybe he was going to be sacked. That was how kind of tightly knit this decision was and how much people weren't expecting it. I think it's safe to say, actually, even though Labour's in the lead, they've been a little bit blindsided by it too. The party only just allowed its staff to book holiday for the summer. They now have to quickly rescind that. So yeah, I suppose the Downing Street team thought that with the inflation figures, this was a good time to go. I think others would argue, actually, that moved the inflation figures off the top of the news agenda yesterday. Instead, we were just looking at Downing Street and Rishi Sunak in the rain.
I mean, Alva, this, you know, you've covered politics for many years. So was this actually very tightly kind of secrets, you know, kept secret so that they would blindside Labour so that they're not prepared? Or what's the reason for this kind of coming out of the blue?
Yeah, I think that the political wisdom is that you have very few advantages as the government, as the incumbent, but one of them that you can use is the element of surprise that only Rishi Sunak could call the election, and so he did blindside Labour with this. I think that's the idea, but I mean, they are 20 points behind in the polls. It is a massive gamble. And definitely, speaking to cabinet ministers, MPs yesterday, there was a lot of shock, quite a lot of frustration, even just with the optics yesterday. I think a lot of Conservative ministers feeling that was quite unfortunate as their sort of opening bid to the public.
Simon, I mean, the rain didn't help the Prime Minister. I was kind of like, you felt sorry for him because it was, I think, a well-delivered speech, right? He set out his points, he seemed authoritative, but it was kind of like in the rain, he looked drenched, and then that kind of music blasting from, you know, pro-Labour.
Yeah, it wasn't the best optics, was it, for firing the starting gun on an election campaign where the narrative and the imagery is going to be key to frame, perhaps not throughout the first 6 weeks, but certainly over the next few days, he gets to that point. He gets to frame the narrative by the element of surprise. Look, I like to look through everything through an economics lens, but I think yesterday was has to be interpreted through a political lens. Yeah. I think the risk was that Rishi Sunak would be accused, as Gordon Brown was in 2009-10, of squatting in Downing Street when the public was ready for a change. And I don't think throughout the summer and into conference season, Rishi Sunak wanted to be facing off to that.
I mean, we understand that the Prime Minister and, of course, his team thought that economics would maybe be on their side more as they called an election. I mean, do the inflation figures, again, it's one inflation figure, it doesn't make a trend, but is that going to go against them?
Well, look, I think most people, not economists, not necessarily market participants, but most normal people would look at the price level, which is up 23% in the UK. It has to be said it's up 21% in the euro area, 21% in the US. So we're not massively out of kilter with those. But if you look perhaps with parallels the other side of the Atlantic with the United States, the Biden administration trying to go into their own election making a strong economic argument, which, by the way, on any objective measure is stronger than the UK, and yet the public not necessarily listening because they look at it in terms of price levels, not rates of change. But there is still some more disinflation to come. And we know the energy price cap in the UK, which is such a big input, goes down a further 7% on the 1st of July. So I think the inflation data potentially does get a little bit better, but I think the chances of any electoral support or credit is pretty limited.
UK May services PMI are just coming out, falling to 52.9. Again, it's expansion, but it's less than expected. Manufacturing PMI, actually better than expected. It was in contraction, so it was below 50, and it's now at 51.3. When citizens go to vote, I mean, do they just vote on what the UK Conservatives have done for the last 13 years? Do they look at the price of milk, or do they look at other things?
I think going into this election, it feels a bit like a tipping point. For many people looking back at 1997, there was actually a much stronger economic recovery after the UK left the ERM, the European Exchange Rate Mechanism, in 1992. There was a currency devaluation, strong growth, real growth at annualised rates of 3-4% going into that. No credit given to Ken Clarke, the Chancellor at the time, John Major, the Prime Minister. I think there are big parallels there. Yes, a recovering economy, but actually I think to some extent, we've seen this in a lot of the by-election results, the local election results, just the country quite fatigued and ready to give the other side a turn. I think it's as simple as that.
But, which is why we haven't seen, like, Keir Starmer has been very careful in kind of not breaking the China, vase and actually not saying too much because he's so far ahead. Will that tactic change in the next 50 days of campaigning?
A little bit. I think they do have more announcements planned, but essentially they've already outlined their 6 pledges. I think there's there's thinking in the Labour Party that you can end up saying too much and that drowns out your entire message. In 2019, they learned that under Jeremy Corbyn, a lot of his policies individually polled very well, and collectively that manifesto was a disaster, led them to this historic defeat. So they have learned from that. It's a very different group of people leading the Labour Party now. I think that they are trying to emphasise economic stability rather than economic change or growth, which was they were promising a couple of years ago. Stability first, basically. They want to promise change, but more than that, they want to be reassuring. That's their number one priority.
Okay, thank you both for joining us. I'm French there. Panmure Gordon's Managing Director and Head of Research stays with us, and thank you so much, Alva Ray, for also giving us some great insight. More analysis after the break, and this is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people. It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper. I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you You can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
With us, Simon French, Panmure Gordon's Managing Director and Head of Research. We're also joined by Adrian Woolridge from Bloomberg Opinion. You wrote a scathing opinion piece. I don't know if scathing. Do I call it scathing? I mean, it was quite opinionated.
I think scathing is fine.
I mean, you said basically it's time to get rid of the Tories.
Absolutely. I mean, the question is, why did they call the election when they did? And I think the answer is that there's simply nothing more left for them to do. They've been a failing government for some time now. There's no upside. There's just downside to remaining in power. I think it's good to get a new start.
But there's not money in the kitty.
There's no money in the kitty.
How much of a new start is it under a new government?
I think it's new people. It's new energy. I think these people have been in power for 14 years. A lot of them are very tired. A lot of them have run out of ideas. So new people. And I think that although there's not that much money around, I think there are organizational changes. There are ways of organizing the way that planning is done, for example, that could get more productivity out of what we've got.
Simon, is this a market event? I can't really make up my mind because it doesn't feel like, I know there's questions about carried trade and things like that Labour will have to probably drill down on.
I don't think it is a market-moving event either for sterling or for gilts or for UK equities. There may be, if we start to see in the manifestos, particularly on the Labour side, stuff that Adrian is talking about on planning, you may start to see some of the domestic house builders start to move on expectation of larger volumes. But I think any of the knotty political issues, the lesson from the 2017 general election when Theresa May tried to grip the issue of social care funding, it was dubbed the dementia tax. That will put off both sides, and particularly Labour, from putting anything transformative in the manifesto that could be picked on, grabbed as a soundbite and is used as a stick to beat an incoming Labour government on what they might do, even if they're very sensible, as actually arguably what Theresa May was proposing in 2017 actually was.
But what are the market betting on right now? I mean, I know we're not like political spinsters. Well, maybe Adrian is at the margin, but it seems like this is a Labour win, if not a landslide.
It does, although I was interested in what Lizzie was saying earlier before the break about Betfair getting a lot of bets on no overall majority. I think the nature of the swing required, given the Labour Party performance in the 2019 election, is significant. But I think the element that perhaps is being missed is quite how much Scotland coming back into play for Labour changes that calculation. Actually, therefore, the nationwide swing might not need to be as significant if the S&P collapse their vote share in Scotland.
Yeah, if you're an investor looking into the UK, do you feel like it's stable because Labour is really seen as pro-business, or is there, again, what will they do for attracting money? This is a small, open economy.
I think it's pretty stable. I think Rachel Reeves has pledged to be very conservative in terms of what she's going to spend. There are no massive commitments. You know, what commitments they've made, they've rapidly rode back on, such as all the money for green taxes. And I think they know that they're inheriting a difficult economy, and they will be conservative about that. I think there's a big difference between now and 1997. In 1997, Tony Blair inherited a good economy, a growing economy, and a very good fiscal position. We've not got that now. So in some ways, we'll have a continuation of what we've had over the last few years, which is disappointment, really. People wanting better public services, better productivity, all of those things, and the government really struggling to deliver what the people want.
So Adrian, how do the Tories, after the day after the election, then regroup?
Oh, well, that's going to be a very interesting story. If you think the last 14 years of Tory rule have been an era of chaos in the Tory party, you haven't seen anything yet. You're going to have a big battle between people who think the Tories have to move to the right to bring back the reform voters, and who think that the future lies in bringing Boris back or Farage into the Tory party in some way, and the people who think that they need to move right back to the centre and go back to a more one-nation traditional Toryism. So there'll be a lot of fighting on the right.
I'm sure. Simon, does this help out the Bank of England? Because, again, there was concern about the timing of the rate cut and whether they'd be seen as political. Of course, we're not expecting anything, possibly until the summer.
Yeah, I mean, look at the danger of pushing my own house view. We've thought the first rate cut all year would come in August, and actually a combination of the general election, but perhaps more relevantly, a 2.3% headline print on CPI yesterday, but a 5.9% services print within that probably gives the Bank of England pause for thought of entering itself in the margins into a febrile political atmosphere in a general election campaign. They've got another 6 weeks until the August MPC. They want to ease monetary policy. I think staying out of the election and going 6 weeks later in the start of August is the smarter move. No one associated with the Bank of England will publicly or even probably privately acknowledge they would weigh on their thinking, but I think it will.
Yeah, it has to. Factor into their thinking. Simon, thanks so much. As always, Simon French, Pamela Gordon's Managing Director and Head of Research, and Bloomberg Opinions, Adrian Orridge, also joining us. Now, be sure to catch a special episode of Bloomberg's Voternomics podcast, analyzing the Prime Minister's decision. Adrian features in that. That's available now wherever you get your podcasts. Now, coming up, BHP has won an extra week to convince Anglo American on its $49 billion takeover plan. Will that be enough time to iron out a deal? We'll have more on that next. And this is Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep Green World Cup. This is a 3
as the economic picture,
covering the intersections of Hollywood, Silicon Valley, and beyond.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Economics, finance, politics. This is Bloomberg UK. I'm Francine Lacqua here in London. Now, BHP has won an extra week to convince Anglo American on its $49 billion takeover plan. After a month of rising tensions, the companies are holding talks after BHP raised the value of its proposal for a third time earlier this week. Well, let's get straight to Will Kennedy, of course, who oversees all of our commodities and energy coverage. Well, okay, an extra week. I mean, does it give it enough time? They don't want to go hostile. Does it give enough time to convince them that they're the best solution?
Obviously, it's a sign that they're starting to talk, and that's the big change. They asked for an extra week and said they're open to having the conversation. I think there are a couple of things to bear in mind as we wait for the denouement of this saga over the coming days. First, I think the two sides are probably close on price. The first two reactions to BHP's offer said that it undervalued the company. It was interesting to see that reference dropped, which suggests that on value they're close. The sticking point, as we've discussed all the way through, is South Africa. And Anglo American's concern is that the proposal to demerge two South African businesses is overly complicated and will make executing a deal very hard to do. So I suspect the talks will focus on the mechanics of getting the deal done around the South African business. Where we ultimately get to, we don't know. I still think it's possible that BHP ends up walking away.
So, well, the question is, and I know I always tap you for like information, I call you, I like try and grab you in corridors, is like, why is no one else coming in? And you say everyone's busy, and then we have this article actually in the FT saying that there's an activist investors saying Rio Tinto should abandon its primary London listing because it gives them a discount because of the dual listing, but also because they can't do large acquisitions.
Yeah, so Rio Tinto has this dual listing structure, and the London primary listing trades at a discount to Australia. I think a lot of people feel that that does limit their room for manoeuvre in doing big paper public transactions. Of course, BHP a few years back had a similar dual listing structure, and under pressure from Elliott at the time, an activist investor, it changed that. And one of the consequences of them simplifying their structure is they are able to do perhaps this deal with Anglo today. So it's not a surprise that that structure for Rio is coming under scrutiny. Whether it ultimately leads to change, I think it's too early to say. Yeah.
I mean, could someone come back in, or would that take months?
For Anglo?
Yeah, for Anglo.
I think at this stage, that's unlikely. But if the deal doesn't happen and BHP has to go away for 6 months under the takeover code's put up or shut up provision, obviously a leaner Anglo, an Anglo which has promised to restructure himself, will come back as a possible takeover target. And I don't think that speculation will go away in the months or years ahead.
Well, thank you so much, as always, Will Kennedy there with the insight and inside on some of these deals. Now, be sure to catch a special episode of Bloomberg's Votonomics podcast analyzing the Prime Minister's decision. It's available from today. This is Bloomberg.
Recently, I believe, is that you're going to do something called the Steve Jobs Archive. And what is that designed to do?
We are trying to honor and elevate individuals through the inspiration of Steve and his life. But I think much more importantly, we are trying to find the best way to communicate to others his ethos and his sense of enormous human possibility so that people can encounter the archive and feel inspired to do something even greater in their own lives, or to stretch what they think is a boundary or something that they didn't contemplate for themselves. So we are still in the collection and development mode. We're building out programs. I think you'll see in the future, you'll see some scholarships and fellowships. You may see some publications, but it's much more about forward-looking and inspiring people to think about how they can be part of positive movement.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in. We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Good morning from our global headquarters in New York. I'm Manus Cranny alongside Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
No signs of slowing down. NVIDIA is on track to add $160 billion to its valuations after crushing outlook expectations. Treasury steady after a post-Fed minute decline. The latest log shows the central bank is in no rush to cut rates. And the U.S. Justice Department plans to sue Live Nation this week for antitrust violations related to Ticketmaster's control over ticket sales. Good morning, Manus.
Yeah, Danny, I'll welcome that. The price of a ticket to Taylor Swift. We'll talk about that in just a moment. It's almost like Oprah Day for chips, isn't it? NVIDIA was more important, perhaps, than any monetary policy decision. And as you say, $160 billion is where we are at the moment in additional market cap. All boats are rising on the back of this. You've got AMD bid up as well. Now, we're going to debate with HSBC. What is the more significant thing? Is it the buyback, the dividend, the guidance? The guidance is supreme in terms of the second quarter and going forward. UBS also up their global tech earnings narrative to up 20% this year and 16% into next year. And I love what Andrew Slimmon says over at Morgan Stanley. We're in the FOMO moment. In other words, another record high in the S&P 500, but we're in FOMO. We've got this fear of missing out. It is not a drop in yields that will pull in liquidity there. The bond market is looking at a retrospective piece of information from the FOMC. The short end popped, and again, we're up by one basis point this morning. The view very, very clearly is that there's slightly hawkish tilt. Many question how restrictive rates were, and as you and I just discussed before we came to air, a variety talked about the willingness to tighten. So again, it's retrospective, it's before the CPI number. I thought we'd just throw in copper, Danny, because it dropped by 5% yesterday. I mean, parabolic rally that we've had. But demand destruction is kicking in China. They're pushing back at having to pay over $11,000 at one juncture for this copper. And in that respect, Danny, it is the manifestation of demand destruction. Good morning.
I love that you called this Oprah Day for chip makers. Like, you know, I'm going to look under my seat and there's going to be a dividend, and now only, $100 stock there. Man, it's the thing I love about NVIDIA, all of the hype around it. And the hype is real, right? The earnings showed us this. But I love the excitement over an 150% increase in the dividend.
I love a banner headline.
It's peanuts. It was 4 cents.
We'll talk to the guests in a moment. Yes, it's only 4 cents, and you're right. It's not the size, but it's the direction of travel. And if you think of like the Meta dividend, the Google dividend, it's more a narrative about a shift in growth stocks. And where are we? Are we evolving into a slightly new era?
Yes. If just one more thing.
Go on.
The stock split. And this I love too, because every time a company has a stock split that's really expensive, expensive, the share price goes up. But if you believe in efficient markets, it shouldn't. But it just shows how much firepower is behind NVIDIA and how many retail investors want to buy the stock. And it's now a little bit easier to do so.
Well, stock split is a democratization in many ways, and it will add to liquidity into the base. But let's talk a little bit more about NVIDIA and the AI boom. It's not going away. You've got this bullish forecasts, igniting a rally, as Danny just said, of more than $160 billion in the aftermarket. Here's what the CEO, Jensen Huang, had to say about the earnings on the call.
The next industrial revolution has begun. Companies and countries are partnering with NVIDIA to shift the trillion-dollar installed base of traditional data centers to accelerated computing and build a new type of data center, AI factories, to produce a new commodity, artificial intelligence.
Let's get a little bit of context. Frank Lee, head of technology research over at HSBC, has a buy rating on the stock. Good to see you this morning. $1,350 is your target. We traded over $1,000 and bid. The question I have for you is, this is about getting beyond the 40% that delivers the main revenue. This is about growing and believing that NVIDIA can grow beyond Amazon, Microsoft, and Google. So this is very much a belief in the growth of the base. Good morning.
Hi, guys. So yeah, I think if you look at how the stocks reacted, it was another beat and raise quarter. But I don't think the magnitude of the beats weren't necessarily that significant. I mean, I think some of the buy side expectations were largely in line. But what was really, I think, people are excited about the story is really about the roadmap. I mean, if you look at the roadmap, one of the things that people are excited is this new Blackwell platform that's coming, and we think that Jensen just referred to a new type of architecture. That's exactly what it is. Next year, they're going to deliver this NVL rack architecture. It's going to significantly increase their ASPs, and that is going to be another year of potential upside relative to where the market is. So I think that is, what's really the exciting part. While people tend to focus a bit on the quarters, I think, the faith and belief is really not just a single quarter, but this story is going to continue to carry on for some time.
Help us mere mortals without the brain to understand AI, exactly what that means. Frank, is that going beyond, for example, the big hyperscalers, the Meta, the Google? Is this a product that caters to a wider universe of companies?
Yeah, that's a great question. I mean, obviously, I think last year, one of the concerns people had was that they're growing fantastically, but can they keep this up? Because the majority of their CapEx spend was the hyperscalers driving that growth. But I think what you've seen this year is that there's definitely an expanding market beyond hyperscalers toward the enterprise. So you've seen, NVIDIA recently talk about working with Dell. Dell is really, his strength is really in the enterprise market. So we're now talking about a bigger TAM beyond traditional hyperscalers. Now, the hyperscalers will still unquestionably be an important driver, but it's now they've got a much wider client base and application than I think what people thought a year ago.
And where are they in terms of being just so far ahead of everybody else in terms of catching up with them and developing their own chips? And it's essentially, I suppose, protecting their pricing power.
Yeah, I mean, I think if you look at what's happening is that, we have seen these hyperscalers looking at designing their own chip, what they call ASIC chips, application-specific ICs. And I think there was a belief that there would be an opportunity for them as they go into the second stage of AI from training to inference. But what we've clearly seen is that NVIDIA's roadmap has come out and continued to demonstrate their lead, and it's making it a lot harder for their competitors to try to narrow that gap. So it looks as though with the roadmap we see for the next 12 months, that gap's only going to widen instead of narrowing anytime soon.
So Frank, with that gap, cash on the balance sheet, $31.4 billion, up from $15.3 billion a year ago. We know partially how they're spending that with the teeniest little 150% increase you've ever seen to 10 cents a share. How would you like to see that cash spent? Do you want bigger dividends or something else, more CapEx? How does it make sense to spend that?
Well, it's a good problem to have because they're in a business where they really don't need to spend a lot of money. It's they're a chip company. All the heavy lifting in terms of CapEx is actually being spent by TSMC, who manufactures the chips for them. So essentially, it's a cash machine. So I think continue to increase your dividend payout will be a positive. There could also be, I think, more opportunities for any kind of investments and acquisitions. It's not too long ago where there was an intention to buy ARM, and so I think they could continue to be looking for opportunities to do that, or even invest in startups to develop their own customer base. So there's I think smaller CSPs they've invested in that are becoming more important clients now.
What is the secret sauce when you look at the concentration of demand for their product, but is there a concentration in terms of human capital at NVIDIA that the others just simply don't have? Are we at that stage of where all outstanding human capital really wants to work at NVIDIA relative to the other peers in development? Do they have that level of moat? What are the moats around NVIDIA?
Yeah, that's a great question. I think if you look at why they've been so successful, is obviously they've been working on this for a long time. This AI story, while it feels like it just came out overnight, they've been working on these products for a number of years. And if you think about, they have largely not been participating in the whole smartphone and mobile product cycle. So I think they've had a long time to work and develop their expertise and hence create this moat that's going to be very hard for people to break. And so I think and now they're basically putting everything together. They've got an extremely strong moat when it comes to software as well. So it's not really a chip company. So I think one of the biggest takeaways is that it's not a semiconductor chip company in a traditional sense. It's becoming a system solution, all-in solution provider for AI.
Well, to that point, because 75.5% margin is insane if it is a traditional semiconductor chip company. I mean, that's a type of margin. I think Intel at the height of their margins only saw something in the low 60s, Frank. So 75.5. Do you look at that and say, okay, if they're transitioning away from just being a semiconductor chip company, they can maintain that kind of level of margin?
Yeah, that's the big debate right now because, while they are transitioning, the majority of their revenues are still based on semiconductor chips. And it is kind of an abnormal profitability that they're getting for relative to a semiconductor company. But at the same time, there's a lot of value in terms of what they're doing in terms of being a system integrator and a software company. I mean, I think people sometimes underestimate the extent of how that software mode is, and that also provides value added. But they're also driving, I think, beyond just the company itself, their whole supply chain, especially in Asia. You have a lot of companies that manufacture their servers. Their margins have also been improving. So in a way, it's been a positive ecosystem, not only for NVIDIA, but for some of the supply chain companies involved with them.
Okay, Frank, appreciate it. Frank Lee of HSBC helping us cover NVIDIA. Shares pre-market up some 6.5% on that beat. Okay, Manus, let's get to some of the other top stories trending on the terminal. There are other stories today, if you can believe it. The insider trading case against hedge fund Sanganti Capital and its founder, Simon Sadler, is said to be moving to a higher Hong Kong court that can hand out longer sentences. The court can impose up to 7 years in prison for convictions. It's one of the city's highest profile insider dealing cases.
Alibaba is said to be considering selling a convertible bond to raise $5 billion. The sale would help fund share repurchases and boost growth. This follows a $1.75 billion offering by its rival retailer, JD.com, this week.
China held the biggest military drills in a year around Taiwan. That happened just days after Lai Ching-te was sworn in as president. Taiwan deployed sea, air, and ground forces in response.
Coming up later, we'll catch up with Matt Maley of Miller Tabak on why he sees limited upside with this potential rally.
And BHP has an extra week to convince Anglo American on its $49 billion takeover plan. More of that coming up here on Bloomberg Brief.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world right here on Bloomberg. Context changes everything.
Now is the moment for Britain to choose its future. To decide whether we want to build on the progress we have made or risk going back to square one with no plan and no certainty. Earlier today, I spoke with His Majesty the King to request the dissolution of Parliament. The King has granted this request, and we will have the general election on the 4th of July.
UK Prime Minister Rishi Sunak there telling the UK that now is the time to choose, as quite the scene as rain fell on him and music, which happened to be somewhat of a Labour anthem, blared behind him. Also there near Rishi Sunak was our very own Lizzie Burden, our UK correspondent, who's now outside of Westminster. So Lizzie, I mean, there's really no precedent for this, having a Prime Minister call for election when they are so down in the polls. So why choose July 4th as the date for the election?
And why on earth would you choose it when the rain was coming down like it was, Danny? Rishi Sunak down and out the front cover of the Daily Mail newspaper, the Daily Mirror newspaper this morning. Look, there are three main reasons I would say that he's gone for July the 4th. First of all, he picked the day to call the election when inflation hit 2.3%. In his words, that's back to normal. And so he's going to present himself to the electorate as the Prime Minister that turned the economy around after Liz Truss. They've also had sight of the latest public finance figures, which would suggest there's not a lot of wriggle room for more tax cuts before an election in the autumn. And then, of course, he'll have had an eye on the poll lead of Labour's that only keeps widening. Some polls show a 30-point lead for Labour. So Sunak trying to put a plug in that before it gets any worse. But for Keir Starmer, the opposition Labour leader, now he's got to turn those polls into votes. And because of the absolutely atrocious performance of Jeremy Corbyn, his predecessor in 2019, he has got on his hands the biggest uphill battle since in the whole of the post-war period. I've just been speaking to a man who's taking bets on this election already. He's at Betfair Exchange. He's just over there. He's got the odds on a Labour majority of 2-9, no majority 11-2, and a Conservative majority at 33-1. So it's most likely that you'll get a Labour majority, but actually he tells me that they're taking more bets, not more money, more bets on no majority. So clearly people think it's worth taking a punt on Keir Starmer not doing as well as people might think.
He's certainly going to need a fair win behind him from the Bank of England. You know, pocketbooks matter. The CPI, he chose to announce when CPI was coming back in his words, back in line. Do you think the table is set enough for the Bank of England to cut in June? They're very unlikely to do that ahead of an election on the 4th of July. They'd be accused then of politicisation.
Of course they would be accused of politicisation. The optics are inescapable. The old lady of Threadneedle Street helping the government. That's not the look they want to go for. I was just speaking to the former Bank of England policymaker Michael Saunders here on the Green in Westminster. He said the reason they won't cut in June is the data. it's not because of the election, but the reason they'll factor in the election is that now a June cut's not priced by markets. They're not going to want to add to volatility by making a surprise cut.
Okay, Lizzie, thank you very much. Great work down there on the green outside Westminster. Lizzie Burden. To BHP, they have won an extra week to convince Anglo American of the merits of their $49 billion takeover plan after a month of rising tensions. The companies are holding talks. BHP raised the value of its proposal for a third time earlier this week. So we're counting down on this. There's a week to go. Our senior editor for energy and commodities, Will Kennedy, joins us now. So is this a kind of a fill or kill moment on this deal? What is it that BHP are going to have to do in the next 7 days to bring it over the line? Will, good morning.
Good morning, Manus. I think we've got to a stage where perhaps price isn't the big issue here. The first two BHP bids were called undervalued by Anglo American in their response. It was notable that they dropped that language in their response yesterday, and talking to people who are close to this process, these seem to think that the companies probably aren't that far apart on the valuation of Anglo American. So now they're actually talking for the first time over the next week. What are they going to be talking about? I think the sticking point, and we've talked about this a lot the last few weeks, is South Africa. The complication of demerging these two South African businesses from the Anglo structure, Amplat's the platinum miner, and Kumba, an iron ore miner. And that is difficult to do. BHP want it to be done before the merger can go ahead. And I think a lot of the focus is going to be on the mechanics of that and whether it's actually feasible. It's interesting that there's still quite a lot of skepticism that this deal will actually happen. If you look at the share price, which you just flashed up on the screen there, Manus, it is well under the latest BHP offer. So it's getting closer, but I don't think that we should feel like it's done.
Okay, Will, thank you very much. A week to see what happens. Will Kennedy there. All right, Manus, some breaking lines. At the top of the hour, we got the Eurozone's negotiated wages. They rose 4.7% year over year in the first quarter, Manus. Not only is that a pickup from 4.5% the prior quarter, but this matches a record that is set. This is a problem for the ECB, which only in a few weeks is supposed to cut, and wages are moving the wrong direction.
And this goes back to what Lagarde actually said yesterday, which was that she sees a June cut with inflation under control. Her words, there's a strong likelihood of a move next month if the price holds. But of course, these negotiated wage deals, what portion of that is in Germany? What portion of that is in other countries? So does it undercut June?
Well, the thing is they broadcast June so much. You can see markets aren't moving hugely. We showed a euro that's up only about 0.1% because perhaps this market knows that they're going to go in June regardless. Manus, I think this throws into question what happens after June. Can you really cut continuously if this is what the wage picture looks like? Okay. Coming up, you know we got to talk about Taylor Swift. She's never far from our minds. Remember when she prompted a bunch of economists to upgrade Singapore's GDP? This time she's got a Europe effect going on. More on that next. Context Matters on Bloomberg.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build. So it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
Your Bloomberg Brief, Danny Berger and Manus Cranny in New York. All right, let's get some front pages for you. Look at what's making headlines around the world. So this one you saw, Manus. It was on the New York Times. So Nikki Haley gave her first public appearance since dropping out of the race and said not necessarily an endorsement of Trump, but that she would vote for Trump in the November election. Is it enough to bring voters under the Trump umbrella? Not necessarily clear. I mean, as far as endorsements go, this was a pretty weak one. I don't even know if we can call it that.
She was still polling quite well. You got to ask yourself, what's the subplot in terms of politics for Nikki Haley coming out and actually saying that there's a race on for various positions in that administration, if that is the administration that comes along. Now, Bloomberg, this is one that Danny and I have touched on a couple of times. FINRA doesn't want to take the blame for getting you back into the office 5 days a week. The regulator says, look, if anything, the announcements that we're going to make over the next couple of weeks is about giving more flexibility. So this is, as you say, setting the stage really, you know, there's carrot and stick, but this is about a stick from employers. In other words, if you don't come back, we're going to know you're not here.
Right, well, this is off the back of Barclays saying, according to people familiar, you need to come back in 5 days a week if you fall under FINRA rules, and basically blaming FINRA. As I said this yesterday, I say it again, I think it's an excuse. Barclays is going on a big cost-cutting program, £2 billion. What better way to cut costs than to weed out employees who don't want to come back to the office?
Indeed, it's a little bit of fear, and as I say, the carrot and the stick, and there's more the stick. Now, no show's complete without a bit of Taylor Swift and her economic impact. We saw it in Pittsburgh, we saw it around the world. This time it's in Paris. This is Bank of America data. They're spending like billio when they went to Paris. Bank of America data showed they spent 22% extra. So get ready, London, Milan, and Vienna.
No, we're going to have to ask central bankers about this again.
Yes.
Powell's going to get another Taylor Swift question. I think that's where we're going.
The inflationary effect of Taylor Swift can't be denied.
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down that path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
Morning, what have we got? I mean, it's almost like Oprah Day for NVIDIA.
You get a dividend, check under your seat. There's a 10-for-1 stock split. That is what we got for NVIDIA. That is the story of the day. Who cares about Fed minutes? Who cares about central bank speech? You have NVIDIA up some more than 6.5% pre-market, on track to add nearly $160 billion to its valuation. Futures up 0.5%. 10-year yields unchanged this morning, 4.42%, a little bit weaker yesterday after Fed minutes showed that members of the committee were willing to discuss hikes if the data warranted, something that Powell seemed unwilling to do. I also wanted to put the yen up here. A little change this morning. It's at 156 minutes. I wanted to put this up here because JGBs are now above 1%. The yield is back above there. We've had that. We've had huge amounts of intervention, $60 billion. We've had a reduced bond buying program, and yet the yen is unchanged. There's just not much that authorities can seem to do to juice this thing. I mean, they've thrown everything at it.
Well, the debate becomes what happens next from the Bank of Japan in terms of monetary policy response. And the betting has moved from, 14% of a rate hike in the summertime to now over 60% probability, Danny. And therein lies the point. If you're at 1% now on JGBs, if there is a rate hike in the summertime in late July, what is that going to do? What is the momentum? And then there's the whole repatriation trade as well for domestic investors in Japan.
Yeah, but I do think a lot of this comes down to trajectory of the dollar, too. We know that this is a big part of it. But also, if you have the Bank of Japan potentially making moves, if you have euro area wages, I'm going to come back to this data, Manus, at 4.7%, are rate differentials really going to be as wide as we once thought they were?
Well, the carry trade has been the prime sort of stake in the markets at the moment, so we're going to keep an eye on those. We can't get away from NVIDIA. It was 140 billion at one stage last night, 160 billion this morning in terms of market cap that's been added, as you said, Danny. We've had HSBC upgrading, staying with their buy at $1,350. They shattered all expectations for their earnings, showing that artificial intelligence is here to stay. The CEO, Jensen Huang, spoke about the optimism on the earnings call.
The industry is going through a major change. Let me give you some perspective on the importance of the transformation. The next industrial revolution has begun.
It's begun, Tom. Tom McKenzie joins Danny and I now. Tom, we just caught up with HSBC and the analyst there. He's got a buy rating on the stock up at over $1,350. He said it wasn't a massive beat, but it was about the roadmap and the trajectory forward in terms of the growth potential. And that's the alpha in these results.
Yeah, look, you scour through the analysts' recommendations or at least responses to these results. It's hard to find anything negative. Look, the top line was that the first quarter they came out with a beat, 26 billion or thereabouts in terms of revenue, triple year on year for the first quarter. But more importantly, arguably, was the forecast around this quarter, the second quarter, $28 billion. And to your point, this is a company that, of course, still gets 45% of its revenue from the hyperscalers, so the Microsofts of the world, the Alphabets of the world. And there was a response to that dependence on those companies from Jensen Huang saying, we are pushing into other areas. We are placing other major bets, whether that's building out their own computers, building out the services, building out the software. It is something that they are adding to, and that could be a further catalyst. Then you have the 10-to-1 stock split that Danny was mentioning, and by the way, that 150% dividend increase, and the upside is coming through after hours.
All right, Tom, thank you very much. That is Bloomberg's Tom McKenzie there on the big old rally. Again, we're up some 6.6% in the pre-market trade. For more on how the overall market is reacting, let's get over to Matt Maley, Chief Market Strategist at Miller Tabak. So, Matt, here we go. Another blowout quarter for NVIDIA. We were talking to Frank Lee earlier, who said it's not as big of a beat as it has been, but it was enough to juice the rally. It's enough to juice the rally for NVIDIA, Matt. Is it enough to get the overall market excited and another leg higher in this market?
Well, it certainly could be, Danny. The one thing is that, it's kind of weird because 6% for any other stock would be, unbelievably, this is fabulous. 6% for NVIDIA, still very good, but maybe not as good. I mean, but this time last year, the stock rallied 28% off of their earnings on the first day. It was just unbelievable. And we do have to guard a little bit against about what happened in the August their August report, where the stock rallied about 11% initially and then closed the day unchanged. So we ended up getting a sell the news reaction. But right now, things look very, very good. I mean, it's one of the things that's very interesting. We hear about this 10-to-1 stock split, which means that more people can, especially the individual investors, can buy the stock. But it also means that their options are going to be a lot cheaper, and it makes their options a lot more accessible to the individual traders. In the longer term, that may bring about more speculation that we won't necessarily want, but it's also going to bring about some near-term demand that can help the stock as we move through the end of the rest of this quarter.
Listen, I suppose in part it's that they did not disappoint. They did not miss. The guidance was strong. And it's one of those sort of evangelist moments in markets. Right. I like what Andrew Simmons had to say, and I want to get to know whether Danny wants to know whether you're going to tilt towards your bull or your bear that's behind you. So on the next answer, it's all about the body. It's all about the body language. Full bull. Andrew Simmons over at Morgan Stanley, I like what he says. He says, we got this fear and greed momentum in markets, and where we are right now is record high after record high, 24 record highs in equity markets. We are in FOMO. We are in fear of missing out, and that is what will drive a movement in liquidity more into markets rather than a drop in rates. Does that make sense to you? I mean, we have reasonable earnings, and we have this NVIDIA moment, which was almost a macro moment. Do you think we're in FOMO? Do you think we're moving towards greed or fear?
Well, I mean, the FOMO is an important issue, and it's not just, some people think, again, it's the general public. Everybody just worries about missing out because, they're at their Memorial Day cookout and they say, geez, I'm missing this move with NVIDIA and stuff. The real FOMO comes with the institutional investor, because they're measured every single year. I mean, if an individual investor lags behind the market, they can't fire themselves, but institutional investors can be fired. So, they have to be they have to be there. If this market starts running, they're going to chase it. So that's going to be very important. But that's one of the things you did bring up that's very, very important is that earnings are good, but they're not spectacular. I mean, there's been no increase. There's been a mild increase over the next 12 months, but full year 24 or full year 25 have not been increased, and the market is expensive. And so, remember, last year we had a 25% increase in the stock market with zero gains in earnings, okay? So the market's up 37% since the beginning of 2023, and earnings are up about 10 to 11%. We need even bigger earnings to really justify that. So we're really going to have to see interest rates come down, and everything we hear from the Fed right now is that they're not going to come down a real lot in a real hurry. So that does create a bit of some headwinds as we move through the summer months.
Matt, I have to say, it is remarkable how people can look at the same set of data and come with different conclusions. We were just talking with Coco Agablue of SocGen yesterday, who said that earnings were strong enough to justify the price increases. Matt, I feel like you're almost a contrarian in this, because we also see just this huge momentum around excitement in this market. You see positioning that's moved from neutral to outright long. Citi has called it a one-sided market. Goldman Sachs says that their risk appetite indicator is the strongest since 2021. Do you fear the one-sidedness of this market right now, if what you say is indeed true, that earnings are not keeping up with the price increases we've seen?
Yes, I do. I mean, we all know that bullishness is good until it starts to get to extremes. And we're also looking at a market that's overbought on a technical basis, whether you look at the relative strength index and other readings. So it does become that concern. And I guess the other thing that I worry about is that people saying, well, don't worry, this is not like it was at the end of the 1999, early 2000. Well, we don't have to get to the extreme, those wildly bullish extremes that we saw at the biggest bull market in history, for it to be, something that to be concerned about. So yes, I'm very, very worried about that. And the thing is with this whole thing about earnings is that, excuse me, the whole thing about earnings is that, we had zero zero growth last year. And when people say that they're getting better and they're strong enough, 21 times earnings, I'm sorry, but every single time we've gotten up in that 21, 22 times earnings, and we're also at 2.8 times sales, those are things that are followed eventually by a strong pullback in the market. So that may not happen immediately, but it is something we do have to be concerned about. I know everybody says it's different this time, but I just don't. I've been doing this a long time, and it never seems to work out that way.
So you're not a buyer of the AI productivity dream paradigm shift?
No. No, to answer your question, I'd say, it sounds good, but I heard that back during the internet bubble, and that was a much bigger bubble. But it's.
So you saying we're in a bubble?
Always these innovations.
Are you saying we're in a bubble?
I'm sorry.
Are you saying we're in a bubble?
No. I just say that if we are, well, the biggest thing that we do have to worry about, man, is that we need to see this whole earnings growth shift from the picks and shovels to the end users. And so far, we're really not seeing that. If anything, we're seeing people warn about, trying to pull back expectations a little bit for the real end users. So it really does broaden out in a much bigger way. It's broadened out only slightly. We needed to see much bigger to justify these kind of run up in the market. And we do have to remember that this excess liquidity. Remember that in the late 1990s, we had a big increase in liquidity because of the Y2K issue. Last year we got a big increase in liquidity because of the banking crisis. This year we have fiscal liquidity. If that starts to run out at some point, maybe it doesn't happen until after the election, but liquidity is still a key role in this marketplace, and we have to be careful.
Matt, just quickly here, because you mentioned the broadening out, that it's been minimal. The way it's broadened out is strange. It's gone to things like utility stocks that are now an AI play. I know you look at nat gas because some of its AI attributes. What does it mean in a world where sectors are starting to get mixed and matched and confused? Can I, for example, still look for utility for safety, or if the valuations do come down and what you're talking about, the overvaluations, do I need to be fearful for literally the impact on every single sector this time around?
Well, no. Well, yes and no. I mean, like anything else, when the overall market, the problem, of course, is that it's so highly concentrated. This rally, even though it's broadening out slightly, if you start to see these big tech names go down, I mean, the tech sector is, not just the Mag 7, but the entire tech sector, 53% of the Nasdaq, the NDX 100. Over 30% of the S&P 500. If they start to go down, the whole market's going to go down. We're not going to continue to rotate. If they guys start hitting hard and the indexes start getting hit hard, people are going to start calling the 1-800 mutual fund and start shifting some of their money into cash at 5%. But thankfully, these things like the natural gas stocks getting a little overbought, same with utilities, overbought on a technical basis, so I don't want to chase them here. But they don't have the kind of huge valuation premiums that the tech sector has. So there's still going to be some safety there. It's just you're also going to get hit a little bit, just not as much.
Matt, I've got that number punched into the dial now. 1-800 mutual
Goes
fund.
straight to Miller Tabak, that number.
Straight to Miller Tabak. Get me into cash, dude. Get me some CDs. Matt, thank you so much. Matt Maley over at Miller Tabak. Coming up in the show. Live Nation, it's falling as the Justice Department moves to sue the firm against merging with Ticketmaster. More on the story. Context matters on Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper. I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday.
Brief, I'm Manish Rani, alongside Danny Berger in New York. And a Bloomberg scoop for you. The Justice Department and several states will sue to try to break up Live Nation and Ticketmaster. The shares are tumbling on the back of the news. Alex Webb joins us now. I mean, they have been warned before under the Trump administration to sort of improve their behavior. Now the Biden administration is going for a full lawsuit. What is the monopoly case?
Well, actually, it seems as though this isn't really a monopoly case. This isn't to do with like consumer pricing. This is to do with how the suit will reportedly allege that they force venues to sell their tickets through their platforms. It's actually what's known as a monopsony case, which is something that Lena Khan over the FCC, this is a DOJ case, the FCC has been a real champion of. That's when you control the marketplace so you're the only place that people can sell their wares. So that is something that she thought about, particularly when it applies to, say, Amazon. You know, if you think about Apple with the App Store, Google with their App Store, those are potentially perceived as monopsonies. So that's what this is really focusing in on. And yes, the results could be anything from fines all the way through to a full breakup.
Monopsonies. It's not the easiest thing to say, Alex. To Manish's point, there have been other cases that were taken on the DOJ, the FCC. I mean, this is a regulatory environment where we are seeing more pursuits of antitrust. So how does this specific scoop from the Bloomberg team compare to the cases that are already ongoing?
Well, again, this is actually a similar sort of thing that we've seen elsewhere. The real big one, actually, precedent for this so far is Simon & Schuster, right, which was, put up for sale by Paramount. It was other publishers trying to buy it. That was perceived not as giving them pricing power over book sales, but pricing power over authors. So that if you're a big name author and you're trying to secure a big advance for your next tome, you have fewer places to go to who can bid against each other. So that's actually why that deal was blocked as well, and Simon & Schuster was ultimately sold to KKR. So it's fascinating. They're really going hard after this. We haven't, in comparison, seen quite as many monopoly cases. So I'm going to be following this with bated breath.
Yeah, and we look forward to have you on as you follow it. Again, interesting that it's not necessarily preventing a deal. This time it's about breaking something up. Alex, thank you so much. Alex Webb. Okay, let's get you a quick check on DuPont shares. Up in the pre-market trade, about 5%. The company announced that it's going to be splitting into 3. And the CEO, Ed Breen, will be stepping down. Joining us now is Bloomberg's Kriti Gupta. Kriti, what are the details here?
Yeah, Danny, this is a utilities/industrial company, a company that does a little bit of everything, but the history of this company is so important, specifically with Ed Breen at its helm, who's kind of known as a man who puts together portfolios of companies, then kind of takes them apart. This is not a new story and a new strategy in terms of splitting these companies. Danny Manis, and when you're looking at some of the details here, they're separating the electronic and water units through some of these tax-free transactions. The goal here simply being they're going to make DuPont a strictly industrial company. The new DuPont will simply be industrials. But this is a guy, Edward Breen, who will be stepping down on June 1st, still staying on as chairman, handing over the reins to his CFO. And what he's kind of been doing here is spinning out a lot of these companies and separating them so they're trading a little bit more closely to their multiples and having a more clearer focus. That's a strategy that's really appealing to their shareholders, at least in the pre-market.
So this is about the conglomerate, the weight of the conglomerate discount and about the sum of the parts, the narrative about breaking it up. It's as old as time. But is there a broader market trend? Are we seeing other companies take the same road?
Yeah, splitting apart companies seems to be the new normal, man. As you saw it with J&J, you saw it with United, you are seeing it with several companies because it's proving to be so profitable when you do it, not only to shareholders, but because of the accessibility to a lot of these companies, because it's not that kind of merger and acquisition driven portfolio, it's a more clear vision. That being said, again, this is a very Ed Breen specific strategy. He was actually known, this is his second iteration of being CEO. In his previous iteration, he was responsible again for the spin out of DuPont and Dow Chemical, for example, some of the biggest industrial names that we don't necessarily pay attention to every day. This is a strategy that's worked for this company time and time again.
Kriti, thank you very much. Great upsum on the DuPont story there. Kriti Gupta on the U.S. equity story. All boats are rising on the back of this $160 billion bump that NVIDIA has had through the morning. Danny, can it hold? It's a very interesting proposition. We've had a number of conversations on it. It's for HSBC, it was very much an inline set of numbers, but it was about the roadmap ahead. And then, of course, you've got TSMC spending all the CapEx for you. So, you are essentially a CapEx-light, intellect-heavy company. It's nirvana.
I mean, 75%, again, if you are a semiconductor company, that for margins is crazy. If you are a capital-intensive company, you should not have 75% margins. But NVIDIA has it in part of because of the TSMC story. And Frank Lead of HSBC talked about this. They're widening the net. They're widening the tent. It's not just the hyperscalers. It's Dell. It's enterprise companies. They are shifting their model.
It's about a faith and belief that they can deliver in that enterprise value. They've gone for a stock split, 10-for-1. That is democratization of equity. Or, as we also heard from Matt, it is about volatility now as a result of that stock split because of the options trade.
Yeah, it makes options a whole heck of a lot cheaper. I think that's so fascinating.
Okay, coming up, host of economic data is on the deck. We'll run you through that. Context matters on Bloomberg. Good morning from New York.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg. From the world of politics to the world of business, every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
It's your Bloomberg Brief. I'm Danny Berger alongside Manus Cranny in New York. Let's get you set up for your trading day on this Thursday. G7 finance chief and central bankers will kick off a 3-day meeting in Stresa, Italy. Janet Yellen was just speaking there. Then in the U.S., initial jobless claims come out at 8:30 a.m. Eastern, PMI at 9:45, and new home sales at 10. Then $16 billion of 10-year tips. Those go on sale at 1 p.m. Manus, what you got in those stocks?
Oh, guess what? Let's just close off with a little bit of NVIDIA.
Surprise, surprise.
Surprise, surprise. It's a bit like Oprah Day for the chip stocks. Up $160 billion. Let's see where it ends. You've got a stock split coming through on that as we just had a conversation, a little bit more volatility may come. Dell is up 5.25%, riding this AI wave on the NVIDIA results. And Bloomberg Intelligence says that NVIDIA's robust enterprise data centers results will boost the confidence that Dell can boost their overall guidance. And then you got Snowflake extending their post-earnings gains. They see strong growth, and guess what? It's all focused on the AI product. Shocker.
Bad day to not be an AI-related company, which apparently everything is these days. Just to go back to the idea of the options thing that Matt Maley of Miller Tabak was talking about, because I think this is a point that I honestly didn't think of, and I think it's really interesting. Not only are the individual shares now cheaper to buy because of the 10-to-1 stock split, but now it's so much cheaper to trade options on this thing. If you think about how the options market has evolved, it's a lot more retailers, retail traders using options to make specific bets, but we can see how that can go really wrong. Think of Palo Alto shooting up and then crashing down. Is that NVIDIA's future if they now can have cheaper options?
Well, I think, and the price reaction today, as we say, okay, $160 billion is not to be sniffed at in terms of the reaction function. But if you take your mind back to other earnings releases where it was much, much bigger upside, but the outlook from HSBC is still that the roadmap for the Blackwell platform is strong, and you got to have the faith and belief that they can move beyond the hyperscalers.
I
have faith and belief.
You know, it's the godfather of AI.
Get the popcorn out, as Dan Ives says.
I was going to say, Dan Ives, you know, he's a believer. There are many believers out there. You can see it in the stock price, up more than 6.5% this morning.
we're operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, the electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
What we think we're going to see is softer inflation and softer activity in labor markets.
Potential earliest you would see a rate cut, and depends on what's happening with the data between now and then, would be in September.
You're going to probably see about half of those cuts than what the Fed is currently anticipating.
The risk right now is that they either hold out and cut too much too quickly and kind of overstimulate things and then have to kind of reverse course.
You're going to get probably an unsustainable boom in 2025, and I think the Fed's going to have to start raising.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Bloomberg Surveillance starts right now, live from New York City this morning. Good morning for our audience worldwide. Equity futures positive on the S&P 500 by 0.5%. Coming into Thursday, looking to reclaim all-time highs. It's a beat. It's a raise. NVIDIA does what NVIDIA always does. This is the Southside reaction this morning. Morgan Stanley overweight, no signs of slowing down. Cowen, buy. Another quarter of excellent growth. Wedbush outperform. Lisa, no signs of any pause in demand.
We always talk about how much the share price has gone up in the past 12 months, the past 24 months. Net profit rose 628% in the past year. Wrap your head around that. This is a company that relies heavily on Amazon, Meta, Microsoft, and Alphabet, and that is a feature, not a bug at this moment.
That stock in the pre-market up by 6.6%. Dan Ives of Wedbush joining us a little bit later on. Anne-Marie, a masterpiece quarter.
He says it's a masterpiece that needs to be hung in the Louvre, the most probably famous museum in Europe and in Paris, Jonathan. And what you're seeing this morning is not just everyone continue to say that's a buy, but Goldman Sachs, first thing out this morning, saying, actually, we're going to raise our price target, even though I believe it was just this week that they raised their price target from 1,100 to 1,200. And what was so clear on this call last night is that demand is outstripping supply. And there's this insatiable demand, even for some of the older models that NVIDIA has.
North of 1K in the pre-market. Won't be for very long, Lisa. We're getting a 10-for-1 stock split as well. I mean, I always say, I take sort of the snobbish view on stock splits. Doesn't matter. So some people it does. So for a lot of people it will.
To my son, who wants to get into investing, it matters because suddenly it becomes maybe a little bit more affordable. It basically is a nod to retail investors, basically saying you can come in here. They also increased their dividend by 150% to 10 cents. I love this. It was 4 cents and it went to 10 cents and it was 150% gain. But it is, 150% gain. You get 10 cents.
I was listening to Manus Cranny earlier this morning and Manus sort of nailed it. It's the direction of travel that matters here, and the direction of travel is pretty obvious. Everything is moving up and to the right on the charts, and it moves again that way. We're up by more than 6% in the pre-market on NVIDIA. The scores elsewhere look like this on the S&P 500, positive by 0.5%. In the bond market, bit of price action yesterday off the back of the Fed minutes. We are down again by a single basis point on a 10-year 441. Some of the Fed minutes, I have to say, was there really any news in this? And how dated was it, if you thought there was some news in it? Many officials expressed uncertainty over the degree to which policy is restraining the economy. Various officials also mentioned a willingness to raise rates if warranted. Was that a reason to sell or an excuse yesterday?
This, again, has been a Rorschach test. We've been talking about that extensively, and pretty much all of the notes that came out afterwards reaffirmed what they thought previously with this as evidence for why. Some people pointed to the second thing that you mentioned, that various officials talked about a willingness to raise rates if it was necessary as being something that indicated maybe the specter of higher rates ahead is not totally off the table. Again, were these really changing anything significant? We've heard that from individual officials. So to your point, I'm not sure it moves the needle, but it was an excuse to sell.
I think there's some nuance, though, there when the Fed minutes come out and it says many participants commented on the uncertainty about the degree of restrictiveness. I looked at Jay Powell's testimony from May 1st, or his press conference from May 1st. One of his first sentences was, our restrictive stance of monetary policies is putting downward pressure on economic activity. Is he really representing the committee?
We've been asking that question a few times. How much distance is there between Chairman Powell and the rest of the FOMC? And we'll try and get you some answers later on this morning. Coming up this hour, Angelo Zeno of CFRA as NVIDIA delivers once again, and Awiti Bahaguna of Northern Trust with AI giving another boost to equities, and Bloomberg's Michael Shepard on the latest antitrust suit out of Washington, D.C. We begin with our top story. NVIDIA delivers another beat and raise, sparking a $140 billion stock rally. The AI giant also rewarding investors with a higher dividend and an upcoming stock split. Angelo Zeno covers NVIDIA for CFRA with a buy rating and 160 price target. He joins us now. Angelo, first of all, once again, a beat and a raise. Your reaction to this one?
Yeah, I mean, not surprised, right? So there was definitely some concern, I think, going into the quarter about what the guidance would look like. I think everybody knew it was going to kind of be a beat in terms of the quarter. In terms of the guidance, I think there was some concern kind of going ahead of that kind of Blackwell launch later this year of whether kind of the momentum, for these Hopper chips would be able to kind of, be able to hold up. And, not only are we seeing it hold up, but the momentum continues to get even stronger than it had been earlier this year. And I think that's just a testament of kind of where, the enterprise space is, where these cloud service providers continue to significantly invest, which we continue, where we have told investors, we do believe there is kind of this AI war in the clouds going on. So all that is continuing to drive this strong demand for NVIDIA's GPUs.
So that's Microsoft, Alphabet, Amazon. Angelo, when you think about runway, how long is that runway? What are we talking about here?
I think that's the answer everybody wants, right? It's kind of like, when do we start seeing a soft patch here in terms of, some of these cloud service providers? And, our view is just kind of given what these companies just kind of cited in, after they reported Q1 results, I don't think it happened. You see a soft patch at any point in time here in 2024. And for all intents and purposes, all these companies have essentially kind of alluded to higher spending in 2025 as well. I think when you kind of look at the trajectory of, just the four biggest spenders in the U.S. over the last 6-7 years, those companies have, essentially tripled their CapEx spend. So there's really no reason to believe that the CapEx spend environment is going to soften anytime in the near future. And in fact, as long as you continue to see improving dynamics from an end market perspective for these companies, their free cash flow will continue to grow, and they will continue to invest heavily on the AI side of things. So you're looking at north of 30% growth in terms of AI spend, we think, or CapEx spend this year from the big four. Next year, it probably decelerates somewhere in the mid-teens perspective, but still a very healthy trajectory.
Angelo, NVIDIA's market share in AI chips is estimated somewhere around 80%. Do they face any real competition?
I mean, listen, they're not going to be able to sustain kind of their share position within the broader accelerator space. I mean, what we've told investors is expect them to lose share over time, incremental share to the likes of AMD and potentially kind of, others, some of these cloud providers designing their own custom silicon chips just from an affordability perspective. But that said, NVIDIA will continue to dominate the overall accelerator space, the GPU environment. And more importantly, we do think they continue to take share in terms of the broader data center CapEx dollars out there. So what's going to happen as you kind of migrate towards Blackwell here is, we expect, greater CPU-related revenue, for instance. As, Blackwell is really kind of more of this platform-oriented company. So, you heard them last night talk about Spectrum, which is kind of their new Ethernet offering on the networking side of things. That's going to be a multi-billion-dollar revenue trajectory here in 2025. So there's a lot more revenue potential outside of GPUs for this company, and that's really going to help kind of, bolster their revenue trajectory.
You're going where I kind of wanted you to go, Angelo, which is the idea that a lot of people have been looking for what the competitive threat to NVIDIA is. Maybe that's the wrong question. Maybe NVIDIA is a competitive threat to AMD and Intel because they're broadening what they're offering. They're moving into personal computers in a way, or they're trying to, which is sort of new since the hyperscalers, the cloud computing service aspect has really been the main driver. What does that do? Is that something that really is an existential threat to Intel and AMD?
Yeah, I mean, listen, I think as far as kind of, where NVIDIA really kind of holds their competitive mode, and I think most people are aware of this, is on the software side of things, right? They absolutely control the entire stack out there. And what AMD has really been able to successfully do on the CPU side of things in terms of taking share from the likes of Intel over the last kind of 5 to 6 years is really being able to just kind of have, a hardware device out there to really just, be a second alternative out there. You can't do that on the GPU side of things in terms of a more AI-enabled environment because you need that software offering. And essentially, NVIDIA's got a 2-decade kind of head start here relative to the competition. So it's going to be very difficult for the AMDs, Intels of the world to really kind of crack the code here in terms of on the NVIDIA side of things. In terms of kind of the competitive landscape here, yeah, I mean, we do think NVIDIA is going to, look to take share here, specifically on the CPU side of things, and that is somewhat of a threat or a greater competitive threat for the AMDs and Intels of the world, especially as we start thinking about kind of more energy efficiency issues kind of going on as you kind of move to these kind of AI workloads out there. So, I think Zuckerberg not too long ago cited that, greater kind of, energy was more of a bottleneck at this point in time than even getting his hands on GPUs. So that kind of tells you ARM-based kind of CPUs out there are definitely going to kind of be in hotter demand over the next couple of years, and that's a boon for NVIDIA.
Angelo, given everything you just said, should you have a higher price target for the company?
I think the debate here is really kind of what should be the multiple on this stock. I think a lot of people are kind of wondering, maybe the same thing. Should this be a stock that trades at a forward multiple closer to 40 or 50 times? Our view is 35 times at this point in time. But listen, when we think about kind of how to value this name and what the potential value, of this company is over time, I think Finance 101 kind of tells you the best predictor of the valuation of any company is kind of the present value of future free cash flow, right? And this is a company where we think it's going to generate about $60 billion in free cash flow this year, probably get closer to $80 billion in calendar 2025, and that's going to start looking like levels that we're seeing from the likes of Microsoft out there, which is the biggest company out there. So when you kind of think about the free cash flow trajectory out there, there's definitely upside potential to our 12-month target price, and I think kind of current expectations out there.
Angelo, Finance 101 would tell you that 10-for-1 stock splits don't matter. Do they matter?
Listen, if you're asking kind of an analyst point of view, I'd say it doesn't matter, right? It's not going to have an impact on the fundamentals of this company. It's not going to have an impact on my target price, my estimates, or anything like that. But I will say this, that kind of 10-for-1 split here, it does matter, I think, to the retail investor out there. Maybe some out there that don't have as much to invest out there. I think it's more of a perception thing. I think also, when you think it's about this 10-for-1 split, it also potentially gets them added into more price-weighted indexes. The one I'm obviously thinking about is the Dow 30. We'll see if that finally happens, but it would make all this sense in the world for NVIDIA to kind of get thrown into that index.
Angelo, appreciate your time this morning. As always, Angelo Zeno there of FRA with a 1160 price target on NVIDIA. We're trading at 1013 in the pre-market. Their stock is up by 6.7%. Plenty more on NVIDIA a little bit later. We'll catch up with Dan Ives of Wedbush at 7:30 Eastern Time. Let's give an update on stories elsewhere this morning. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Treasury Secretary Janet Yellen has called for the U.S. and Europe to work together to counter China's industrial overcapacity. Speaking ahead of a minute with the G7 finance ministers in Italy, Yellen called for a united front.
The G7 has collectively recognized the need to protect our workers and businesses from unfair practices, and overcapacity threatens the viability of firms around the world, including in emerging markets. I believe it also poses a challenge to China's growth.
Beautiful backdrop for that speech. Now, elsewhere, Nikki Haley has said that she plans to vote for Donald Trump, but did stop short of an outright endorsement. Haley, who challenged the former president for the Republican nomination, is the latest Trump critic to back his White House bid. She was speaking publicly for the first time since dropping out of the presidential primary. There, she said, quote, "Biden has been a catastrophe, so I will be voting for Trump." Now, Wall Street firms are phasing out work from home, and FINRA wants you to know it is not their fault. An official at the regulatory authority said yesterday that there is no rule requiring employees to come into the office 5 days a week. In fact, their new rules that will be implemented soon will help preserve workplace flexibility. FINRA was specifically responding to reports that Barclays was weighing 5 days a week in the office for employees who come under FINRA regulations. And that's your Bloomberg Brief. John.
Danny, thank you. We'll hear more from Danny in about 30 minutes' time. Just a word on the G7. Just pause for a second. Should they hold it in Italy every year, given the backdrops?
That would be pretty incredible.
Isn't that what everyone in the G7 wants? Just hold it in Italy every year.
Yeah, there are all these whispers ahead of this G7 where all the officials are like, oh, it's in Italy.
Leaders meeting in Puglia in a few weeks' time. Up next on the program, the NVIDIA optimism goes worldwide.
All eyes have been on NVIDIA, and I actually think that there's opportunities outside of just NVIDIA to play the AI theme.
That conversation is coming up next, live from New York City this morning. Good morning.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Or other authorities.
Could face bigger challenges next.
Fed was going to keep rating World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Equities on the S&P 500 doing okay, up by 0.5% on the S&P off the back of better than expected numbers from NVIDIA. We say that every quarter. Beat and raise. The stock is up by 6.7% in the pre-market. Under surveillance this morning, the NVIDIA optimism goes worldwide.
There's a lot of attention with the stock up as much as it is year to date. all eyes have been on NVIDIA, and I actually think that there's opportunities outside of just NVIDIA to play the AI theme. And so I like looking under the surface at more or less discovered names.
So here's the latest. NVIDIA producing another bullish sales forecast, helping lift US futures and the global equity market. In Europe, tech stocks outperforming all other sectors. In Asia, the Bloomberg gauge of chip makers touching a 3-year high. Around the table with us here in New York, Anwiti Bahaguna of Northern Trust. Anwiti, it's good to see you. Stocks over bonds, that's your call. How independent is that call from earnings releases like that one?
This certainly helps, John. Thanks for having me. This wasn't the driver of the call, though. Looking more on growth factors, US GDP growth continues to get upgraded, and growth is broadening globally. In other words, we're seeing that happen in other parts of the world also. That was the main driver, but I'll take this.
It's happening in Europe, it's happening in China too. Better numbers out of Europe overnight as well. It looks like the growth policy mix is going to pick up there. They're going to be reducing interest rates as growth starts to pick up too. Does that catch your eye as well, the continent, the Eurozone?
Absolutely. We've added to developed ex-US, we've added to EM. It is a broadening story globally.
But just to build on what John was saying, is that basically already priced in? Because we've been listening to people for the past 6 months saying Europe is going to be a bright spot, especially with the interest rate cutting cycle. Now we get better than expected activity data coming out of the region. Is it fully priced?
Certainly not in Europe or in EM. When we look at our valuation data, the one area of the globe where markets look slightly extended is indeed US and not abroad. So I don't believe it's priced in internationally.
A lot of people argued that this was going to broaden out only when we saw the rate cutting cycle actually begin. We do have some conviction from the ECB, from Christine Lagarde, that we're going to be cutting, or that we're going to see rate cuts from the ECB starting in June. In the US, it's a completely different picture, and you can kind of read the minutes however you want to read them, but a lot of people are reading them as relatively hawkish, as possibly keeping rates high for the remainder of the year. And this is really kind of crushing small cap stocks. Do you see the broadening out hinging on the idea of US rate cutting cycles getting started on an earlier basis?
Yes, and I think the minutes yesterday were certainly very interesting in that respect, that policymakers are actually debating whether policy is restrictive or not. I think it helps that the messaging so far, at least from the leadership, has been that policy is restrictive and they're not looking to hike. So clearly it'll be quite disruptive if we saw inflation numbers continue to edge higher and the talk changes from policy is restrictive to that question we saw in the minutes yesterday, that is it really restrictive at these levels?
Right, which is something people have been debating. I guess I'm wondering, are we asking the wrong question? We keep asking, when's the Fed going to cut rates? Should we be asking which government's going to stimulate or have industrial policy next? Which company is going to invest dramatically in new technology? How much other money is going to be put into the economy that's going to have a stimulative effect that offsets any potential change in the rate cycle?
Right, and that's the debate of, do we need even more restrictive policy if fiscal is still loose? And we're seeing signs of that. Nothing new really in any of the regions we're talking about, except maybe some more stimulative policy coming out of China, which the markets were waiting for. In the US, of course, election year, you're not going to see any restriction. You may see some concern, is the policy restrictive enough to counter that fiscal or not? But so far, so good.
When you're overweight stocks and you even like international, does that include China?
It does indeed. It's part of the emerging market index, so it does include China.
And the risks that are out there, how concerned are you about them? How high are they on the list?
I think those risks, Anne-Marie, are very well known. They have been well known. It's reflective in the valuations that we see in the markets. Again, it's not that I'm disregarding them. We are not overweight China. It's part of the overweight of the entire complex. Very concerned about geopolitics on that front, but something we are willing to take at these prices.
Help me understand the call on natural resources. So you're sort of more constructive on the global growth backdrop, the US, the rest of the world, particularly Europe. Where are you on natural resources now?
We are slightly underweight, really, because we're just seeing better opportunities elsewhere in the equity markets at this point.
Could you just explain whether that's taken a bearish view on natural resources or whether that really is just a relative story?
It's a relative story, John, more that there are better opportunities elsewhere.
At this moment, you've been overweight stocks, you've been more underweight bonds for quite a while, maybe more neutral on credit in particular because of the extra risk capacity. We've seen that for a while, and we've seen a pretty significant rally. When do you know that valuations are going to test the ability to actually gain more going forward?
Gain more on the stock side,
yeah.
Lisa? Well, valuations, we get this question often from clients that, aren't valuations rich? And this happens not just at the overall stock market level, but, for example, NVIDIA, or looking at any particular segment of the stock market. And we have done some research on that. At the stock market level, when you look at PEs, current PEs, and the forward one-year return of the stock market, the correlation is 3%. There's really very little predictive power in expecting one-year returns based on current valuation. It becomes extremely meaningful when you extend that horizon and look at 5 years or 10 years, then the correlations rise to well above 50. So what I'm saying here is that it's very hard in the short term for valuations alone to be a driver of a sell-off, but other catalysts matter more. Does growth slow down? Does inflation become more worrisome? Those sort of things seem to matter more.
And just putting together kind of where we began to where we are, there's this sort of bet that stocks can be almost the safety bet right now because of how much investment there is and because of the AI play and because NVIDIA always, as John said, is a beat and a race. And that's essentially what we're looking at, fueled by what some people might call a revolution by a godfather in a leather jacket. We'll be talking more about that coming up. How much have we left the 60-40 idea behind? And the idea of bonds as a stabilizer is just off the table for the foreseeable future.
It is a bit worrisome again at the moment. I mean, we haven't left it behind, right? I mean, for an asset allocation portfolio, it is ahead still, a little less than it was before. So when I'm saying we are overweight stocks, we're still holding a fair amount of bonds. And what's driving that worry right now is just that correlations are positive. We're looking to other things to find hedges, and there are very few. Correlations are just driving this. And we need to see that correlation picture change for us to say bonds are back again.
And Witi, another big morning for the market this morning. Appreciate your time, as always. And Witi Bahaguna there of Northern Trust Asset Management. Let's get to the stock of the morning, stock of the week, of the year. I think you get a picture. NVIDIA right now is positive by 6.7%. How do you take exposure to AI? That's a big question. So Joseph Moore over at Morgan Stanley says, bottom line, Lisa, we think the backdrop warrants AI exposure, even amid extreme enthusiasm, and NVIDIA remains the clearest way to get that exposure.
Well, we see that basically borne out in the fact that everyone is putting the bar up here. We've been saying, is the bar too high? A 92% gain going so far this year. Is that too much? Are people going to lose momentum? No way, not a chance. Raise a beat. You've got basically now new dividends. You've got stock splits. You've got basically the whole works. So here's the question, right? At what point does that end?
It's like the Oprah of the equity market. You know, like you get a car, you get a stock split, you get a dividend.
You get a dividend.
Dan Ives of Wedbush, about an hour away, calls it a masterpiece quarter. Looking forward to that conversation. Coming up shortly, Bloomberg's Michael Shepard as the Biden administration looks to break up Live Nation. That stock is down 8.3%. That conversation up next.
names in tech are on Bloomberg.
There is a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Equity futures on the S&P 500 doing okay here, positive by 0.5%. The Nasdaq 100, where the outperformance is, up by 0.9. Nvidia in the pre-market up by 6.6%. It's another beat, it's another race. You knew that already. Before the numbers even came out, you knew that. In the bond market, a 2-year, 10-year, 30-year shaping up as follows. Yields backing away yesterday off the back of Fed minutes. We'll spend some time on that a little bit later in the program. The 10-year 441.78, a 2-year 486.46. We're down just a little bit at the front end of the yield curve. Let's finish on Europe and talk about what's happening over there in the Eurozone. PMIs on the composite, just picking up a little bit once again. Euro dollar 108.46. This from Deutsche Bank. Eurozone growth is rising, inflation is easing, and the door is opening to an ECB easing cycle. This is the growth policy mix, Lisa, we've been talking about, just improving slowly as the year goes on over in Europe.
And what this comes down to is the manufacturing coming back, particularly in Germany. And that was interesting to me at a time when everyone keeps talking about it being left dead in the water. At the same time, no one's saying, well, maybe the ECB won't cut. And that, I think, is the difference between European region and the U.S. You see better than expected data. That is not a reason to really doubt whether the ECB can go.
They seem committed to that move in June. We may finally get that first rate cut in the next month or so. Under surveillance on our radar this morning, Nvidia beating expectations and rewarding investors with an increased dividend and 10-to-1 stock split. If the company's gains hold this morning, it could add more than the entire market cap of Intel to its valuation. Lisa, we're talking about massive numbers at a huge company.
You know, I was reading about this last night because I often feel like I speak about it without understanding anything, which I guess maybe is, normal. But I will say this discussion around a complete change in the concept of retrieving information versus generating answers, generating information. It is definitely a different way of cloud computing, of just in general technology. So if AMD and Intel is behind on that, how do they break into the 80% market share that NVIDIA currently has on AI, which is supposed to dominate everything? To me, the question is not who's going to challenge NVIDIA. It's what is the prospect of some real risk to AMD and Intel going forward?
I'd throw something else in there as well, Lisa. Really, earnings season for NVIDIA started about a month or so ago when we heard from the big tech players. You have to remember the big tech names account for about 40% of the revenue that comes from this company, and they're still spending, and they're being rewarded for that spending as well, which just tells you when we ask that big question, it is the question right now for this name and maybe the broader market, how long is that runway? Big tech players are telling you it's pretty long.
And people were worried, well, maybe this buying will stop ahead of some of the new iterations of some of these chips. And the answer from the returns yesterday, from the results, was absolutely not. They're continuing to spend because the idea of getting this up and running as quickly as possible at a time where there's more demand than there is supply is more important than getting the absolute latest technology.
Stock is up by 6.6%. Before those numbers came out, this happened. The British Prime Minister, Rishi Sunak, taking a risk this summer, calling for a snap general election on July 4th. The surprise move will put 14 years of Conservative government in the hands of voters. The opposition Labour Party has been ahead in recent polls by double digits. Look at these pictures. Who did this to this man? Who sent him out in the rain.
So I heard that it wasn't raining when he walked out of number 10, but the fact is it did start to rain on him. And how do you not come out with an umbrella for the sitting prime minister who's making a very important speech saying that he's calling for fresh elections, which was a surprise to many people, and they're down 20-plus points in the polls. But today he had this to say, and good for him for making light of the situation. He told a BBC radio, a London radio program, "I'm not a, quote, fair weather prime minister."
Well, you know, I gotta say, he can't control the weather. The fact that he can control when the election is held was interesting to me, because he had to hold it at some point before January 28th. At some point, you have to explain to me how this works and how they decide to. But he's completely behind in the polls. So the reason why it's sort of ironic that he's sitting there, he's subjecting himself to punishment. You know, it's sort of the ultimate metaphor. Just bring it to me, because basically the polls have him absolutely trailing some of the opposition, and you have to wonder why he would do it before generating some more confidence.
So the widely held theory was that he would wait until growth started to improve, and growth has started to improve, that he would wait until we started to see rate cuts from the Bank of England, and we thought we were closer. So it was a surprise to many, and I think many within his own party as well, Bramo.
Right, which raises his question again about the rain. And yes, maybe he's not a fair weather prime minister, but still, he comes out, give it to me, let's go, let's just get it over with.
I just find the pictures absolutely terrible. I think the Daily Mirror, which is a tabloid newspaper in the UK, went with drown and out. Drown and out. I'm sure others have come up with some vicious headlines too. That's the latest out of the UK. Here's the latest stateside. Bloomberg reporting the Justice Department and a group of states will sue Live Nation for antitrust violations. The case will look to break up the company and Ticketmaster's control over concert sales. Ticketmaster's mishandling of the Taylor Swift Eras Tour in 22 sparked public outcry and hearings on Capitol Hill. Bloomberg's Michael Shepard joins us now from Washington. Shep, the stock is down by more than 8%. I can't think of a story, a company, where more people will agree on this particular suit down in Washington, D.C. How popular is this move?
Well, you would find a lot of favor here in Washington and probably elsewhere in the country. Ticketmaster is a service that people have come to really despise over their troubles in accessing tickets and finding tickets at affordable prices. And this is, I guess, a nerve that has been hit not only among the public, but also among the antitrust enforcers under President Joe Biden. Remember, his administration has made competition enforcement a central part of its economic policy, and they've been focusing very much on the consumer experience, how people are feeling it in terms of prices and also in terms of access to services, too.
Shep, this was a Bloomberg scoop, but can you just detail to us what actually the DOJ is going to be going after? What does this case actually look like?
Well, you know, Anne-Marie, we're going to have to turn the clock back a bit to 2010 when the two companies were actually joined in a merger. It brought together the nation's largest concert promoter, Live Nation, and it brought with Ticketmaster, which was the largest seller of tickets. And at the time, it went under a strict antitrust review during the administration of Barack Obama. And the companies pledged that they would not tie their services together. In other words, promoters would not tie to artists the ticket sales. If you wanted to have your concert promoted, you wouldn't necessarily have to have Ticketmaster sell those tickets. And yet, by 2019, we saw the Trump administration challenging and questioning whether the companies were actually abiding by whatever promises they had made. They sought a new settlement. And already by 2022, we saw it being challenged yet again, with ticket prices soaring for Bruce Springsteen, for Taylor Swift, and also the website going down, and people just finding it hard to get tickets at an affordable price.
Shep, given all that history and the backdrop of this merger, the fact that it was allowed through Obama, but with some strict policies attached to it, the Trump administration looked into it, also wasn't comfortable with how Ticketmaster and Live Nation were operating. Why did the Biden administration wait so long? Do you think there's any politics attached to this?
Well, I'm not sure there's necessarily politics. Remember, all the antitrust enforcers here in Washington have been very busy over the past 3 years. Remember, they are seeking to block a grocery chain merger between Kroger's and Albertson. They're looking into the energy industry with Exxon's attempt to purchase Pioneer Natural Resources for $60 billion. And then you have to look at all the cases that they are pursuing on anti-competitive grounds against the big tech companies of Amazon, Google, Meta, and Apple. So they have had a lot on their plates, and this is something that they have been investigating for almost 2 years now.
How successful have their antitrust suits been, Mike?
Well, you know, we're going to have to see how this one plays out. And I think the big tech cases that are coming up will be the biggest measure of how they do. They just closed arguments in the Google anti-competitive behavior case, and we'll be finding out how their batting average is when the judge finally rules in that. And that won't be for a couple of months more.
You know, the reason why I ask this is because we're talking here about Ticketmaster and Live Nation. Ticketmaster controls more than 80% of the market for primary ticket sales, the biggest venues in the U.S. You're looking at basically an oligarchy, if not a monopoly, in the entire industry. At the same time that we're talking about NVIDIA having 80% of the artificial intelligence market, we're talking about a lot of the big tech companies continuing to consolidate their market share with incredible loads of cash that they could put any which way. How successful are they really being? And I'm talking about the antitrust regulators in really controlling some of this growth versus just nitpicking around the corners to visually seem like they're doing something.
Well, in the previous segment, when I heard you, Lisa, talking about NVIDIA, the same thought struck my mind. But I think there may be one difference here in that, and this is an argument that Apple has made in trying to defend itself, that, look, we do a really good job with our products, and you shouldn't single us out for anti-competitive behavior just because our products are such a success. And that might be a similar argument that a company like NVIDIA, which was so far ahead of the curve and really had developed technology that was naturally suited to catch the wave of artificial intelligence and building the data centers needed to power this new frontier in technology.
Michael, it's good to hear from you, as always. Thank you for being with us, sir. Michael Shepard there of Bloomberg on the latest. Out of Washington, D.C., Apple might have a case. NVIDIA would have a case. I'm still struggling to see the case that comes from Live Nation. I'd love to hear from the company. What is their case? What's their defense against this?
They make good money. Why stop it? I mean, honestly, there's a great question, especially because the barrier to entry is just so much lower with online sales. I mean, think about other platforms that could get involved. Not really clear how they're going to really offer that.
Following this Taylor Swift ticket debacle, you rarely see senators like Marsha Blackburn and Amy Klobuchar line up alongside each other, which they did in this hearing. Klobuchar, this is what she had to say during that, and this was at least more than a year back. This is all the definition of a monopoly. And then Blackburn said, this is unbelievable. So everyone in Washington is prepared for this and actually excited about it.
The arc of this is interesting, from Obama to Trump to Biden. And I think we've got to ask the question, too, going into next year, regardless of who takes the White House. If Biden keeps it, if Trump comes back, how different it will be, how different the next government will be.
Well, with a case like this, you can see the senators, congressmen and women lining up on both sides of the aisle saying that they want to go after some of these companies. We've heard that as well continuously from J.D. Vance, who says maybe Lina Khan, I know this is the DOJ, but says maybe Lina Khan is the most successful person in the industry. The arc is Obama was allowing it if they had this provision, if they promised to make sure that concert venues could go outside of Ticketmaster. Trump came in, he said, this is very uncomfortable. There was a settlement, and then Biden said, we want a fresh probe.
That stock is down at the pre-market by more than 8%. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. So I have an update on what could be the biggest mining deal in over a decade. BHP has now an extra week to convince Anglo American of its $49 billion takeover plan. Anglo agreed to enter extended talks after rejecting BHP's third and final offer. Again, it did say it was final. Anglo had criticized the first two approaches as too cheap, and so far has objected to the structure of the deal, calling it too complicated and saying it dumps too much risk on shareholders. Harvard University's governing board has decided not to award degrees to 13 students who participated in a pro-Palestinian encampment on campus. That was despite a vote by 115 faculty to allow the students to graduate, even though they violated the university's policies, that according to the Harvard Crimson. The students will be able to participate in commencement ceremonies, but will not receive diplomas. More than 1,500 Harvard College students will get their degrees today. And Warner Brothers Discovery has agreed to a 5-year deal with Disney's ESPN to share college football playoff games. Earlier this year, ESPN signed a 6-year deal worth almost $8 billion to carry the tournament. But under this agreement, some of the games will air on TNT and Warner Brothers Max streaming service going forward. Warner Brothers has been increasing its sports exposure, signing deals for MLB, NHS, and U.S. soccer in recent years. And that's your Bloomberg Brief. John.
Hey, Danny, thank you. More from Danny in that brief in about 30 minutes' time. Up next on the programme, the Fed faces November.
You're going to get probably an unsustainable boom in 2025, and I think the Fed's going to have to start raising.
A conversation just around the corner, the prospect of hikes in 25 from New York. This is Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in? I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Equity futures on the S&P 500 positive here by 0.5%. A little bit of a lift in this market, as you might expect, off the back of better than expected numbers, which maybe you've expected. Nvidia is up by 6.85% in the pre-market. Under surveillance this morning, we're flying blind into 2025.
What happens after the election is probably we get a fiscal boom. But if you're Biden, you have to spend more on defense, you have to spend more on energy, you have to keep spending on the industrial policy. If you're Trump, you're busy pushing out deregulation, tax cuts, whatever it is. Either way, you're going to get probably an unsustainable boom in 2025. And I think the Fed's going to have to start raising.
It's the latest this morning. Treasuries falling after Fed minutes showed officials questioning if whether policy is restrictive enough. Holger Smeeding of Berenberg writing this. The Fed may prefer to wait until after the election is out of the way. If either side wins a clear victory, US fiscal policy may become more expansionary once again, with significant new tax cuts from Republicans or further spending increases from Democrats. Holger joins us around the table. Holger, good morning to you.
Good morning.
2025, sir. Talk to me about the prospect of rate hikes next year. Adam Posen making a case yesterday.
I don't quite believe it, because we rarely get in the US an election result which is so clear-cut that one of the two sides could, in terms of fiscal policy, where Congress is in control, really do something dramatic. We had huge fiscal initiatives in the US right after the pandemic, when everybody was kind of panicking. We knew to do something big. But now, with that unusual situation over, we will likely be in Congress, in regardless sort of the election result, the precise details, into the kind of into a usual gridlock where not much happens. And that means the fiscal impulse, which is currently propping up the US economy, will weaken over time, and that argues for rate cuts next year rather than rate hikes.
What kind of budget deficits are you expecting? We're running deficits of something like 6 to 7% with unemployment south of 4%. What are you expecting? What's your base case?
That's in a way a separate question. Even with the fiscal impulse sort of petering out, the US will likely have fiscal deficits in the range of 7